Good afternoon, everyone. Welcome. I'd like to call this meeting to order of the Insurance and Real Estate Committee. We're going to be hearing testimony today on 6 bills. The agenda is out. I'm going to be skipping around a little bit. So give people some time to get here and online, so please bear with me. But with that, I think we have, is there Rep Reading online? Okay. Morning, Rep Reading.
Hello.
Hi. Please proceed.
Okay. Let me get my, I'm sorry, getting my video thing here. All right. I'm here to support the House Bill 5462. Um, Good afternoon, Co-Chair Senator Cabrera and Representative Wood, Ranking Member Senator Huang, and Representative Pavlak D'Amato, and distinguished members of the Insurance and Real Estate Committee. I am here today in strong support of House Bill 5462, an act requiring a study of civil liability protections for farmers offering agritourism activities in the state. Connecticut is a proud home of many farms, orchards, and vineyards, which provide our state with food security, economic stability, and environmental sustainability, among other benefits. Agritourism is essential to our state, and it provides visitors with the opportunity to experience various aspects of farm life, food production, and other activities while enjoying its rural historic beauty. Unfortunately, as these farmers are opening their doors to the community, they face legal risks and liabilities. By studying civil liability protection for farmers offering agritourism activities, we can gain invaluable insight into the challenges facing our farmers and learn how to protect them from liability in situations that are out of their control. Because of the impactful contributions that farmers and their businesses provide to our communities, it is my hope that the committee will vote favorably on House Bill 5462. Thank you.
Thank you very much, Representative. I appreciate your testimony. Any questions? Representative Pavlak D'Amato.
Yes, and thank you for your testimony. I'm just, if you could maybe go into a little bit of detail, if anybody in your district has been affected, and how and what they've talked to you about specifically. Thank you.
Sure. I've had people that own farms in my district. This bill actually was as a result of outreach from them to me. And this does not protect a farmer from situations where they are at fault. So if they were somehow not maintaining a farm, or they were not doing something that they should have on pathways or protocol, it would not protect them against, bad things that happen to people at the farm. But many farms, they are going to be subjecting people to situations that would feature rocks, uneven ground, unstable ground, ledges, moving water, all of these things, and also wildlife and domestic animals, equipment, machinery. These are things that the farmer, does not have control over. If the people that are visiting are doing something that is not correct, then they may get harmed. This is just trying to mitigate some of those circumstances so that the farmers are not just left to feel as though that they may have frivolous lawsuits.
So have any of the farmers in your district have they had any lawsuits filed against them? And if so, what kinds were those?
No, interestingly enough, they have not had any egregious lawsuits. I think this is a proactive way of looking at, not having that come up. There are 24 states, I believe, that already have this in place. And this would just be a study to see if in fact, this would be a good idea for the state of Connecticut.
Thank you very much for your testimony.
Thank you very much for your testimony today. Appreciate it.
Thanks.
Moving on to it's Jane or Jan. Apologize for Can you hear us? There you go. Representative Denny, I think your microphone is on. Oh. There she is. Go ahead. Not there. What's that?
Making sure, number 3.
Yeah, Miss Jane, I think it's Lakeshit. Number 3, yeah. Can you hear us? There you are.
Yes, Senator.
You.
I am Dr. Lakshya Jain. I'm a principal psychiatrist. I work here at Connecticut Valley Hospital, and I have with me Dr. Jasleen Kaur. I work in the general psychiatry division, and
I work in, I'm Dr. Kaur, and I work as a principal psychiatrist in addiction division in CVH.
we are here to provide testimony for Mental Health Parity Bill SB 402.
So, as in addictions, there is a lot of problem getting coverage for people that are psychiatrically ill or have issues with addictions, like even having multiple episodes of overdose or ending up in federal prisons or state psychiatric prisons because of drug possession or drug-related charges, DUIs, domestic violence under the influence of alcohol, DCF cases, and estrangement for the family does not count towards, anything when it comes to insurance coverage. All they are concerned about is Dimension 2 and Dimension 3. Dimension 2 is mainly medical issues that are even, diabetes, hypertension, CAD. It's easy to get coronary artery disease. It's easier to get coverage for those patients, but the ones that are like psychiatrically ill, meaning they have had multiple psychiatric admissions, several suicide attempts, it's hard to get coverage for them unless they had a suicide attempt very recently. So the main rationale that's given by insurance is, well, doc, but the last suicide attempt was a year ago. And then I've had patients that expressed passive suicidal ideation on the very first day in my note. So they will keep on providing coverage until on my note, it reflects the person is not suicidal or homicidal today. So they will count the number of days until the first note that reflects the patient is not suicidal or homicidal appears in the chart. And I told them, this is not how psychiatry works. There is no medication in psychiatry that fixes the patient right away. If the patient is saying, I'm not suicidal or homicidal anymore on the very first day, it does not mean anything. But then they are going by, oh, but your note says he's not suicidal or homicidal anymore. I was like, okay, but he's here for 1 week. There is no psychiatric medication that kicks in 1 week. But then the patient, they stop the coverage and the patient is not provided any insurance for their stay here in rehab, and most of them have to leave. So there is so much difference. If there is hypertension, diabetes, and the patient is not taking care of himself, that's fine. But then if the patient has severe PTSD to the point that he's unable to function in the community. So this guy I'm talking about was a veteran that was honorably discharged when he was 21, and he was 55 right now. He was so disorganized at home that he could not put in his paper for VA benefits. So we helped him with putting in the paper. That was, an easy task, but the guy was so disorganized, unable to function in the community, that he could not put those papers together and get the services he needs.
Your 3 minutes are up. If you could please summarize.
So just to summarize, here in addictions, we are facing a significant disparity between patients who have medical comorbidities versus patients who are having psychiatric comorbidities. all the patients are struggling with substance use issues, but if they are also have medical issues, the insurance is happy to cover for their stay here. But if they have psychiatric issues like severe PTSD, psychosis, the insurance is almost flatly refusing to support their addiction services here at CVH. And for that reason, we wanted to come here and support that there should be some action taken if there is this discrepancy between providing medical care and psychiatric care.
Thank you so much for your testimony. Are there any questions? Representative Kavanaugh.
Close enough. So the patient that you're talking about, what kind of insurance did they have?
So here we deal with Carelon. Like Carelon is the one that there is a waiver going on in addictions that follows some criteria that were created last year, and they strictly go by that in criteria to allocate the federal funding that has been allocated to addictions after the fentanyl epidemic that started in 2020. So this is the company that assesses patients whether they are eligible for that federal funding. So they have come up with these criteria that are so much written in stone. It's just like either heavily medical, heavily psychiatric. If the patient has been in federal prisons because of drug possession, multiple overdoses, they just don't care because it's not in the criteria.
But the insurance itself, is it through the Veterans Department, or is it?
No, the Veteran Department
Medicare,
did not
Medicaid?
even kick in because this guy did not have those benefits. So it was just whatever, I think Husky D. The insurance that Connecticut gives to everybody who does not have insurance.
Okay, I appreciate it. Thank you very much.
Thank you so much. Any other questions? Oh, thank you. Senator Marks, missed you online. Go ahead.
I was hoping you were going to see us up here in Zoom land.
Bye.
Thank you, Chair, through you. Hi, thank you both so much for your testimony and for doing the job that you do. It's not an easy job. Much appreciated. So mental health parity, the federal government recognizes mental health parity as a high priority. And so therefore the state should too. Have you noticed any difference in the last few years in your practice where the insurance companies have been making it even mental health? You know, that's what the mental health parity bill is, right? So the goal of what many of us would like is to increase the fines to insurance companies for not doing what the federal government and the state government want them to do. So just curious, in your, nobody knows it better than you, who nothing's more frustrated than being a physician, a nurse, a healthcare provider, than knowing what is best for your patient and having an insurance company, probably a pediatrician or an obstetrician, telling the psychiatrist what's best or not best for their client. So have you noticed any difference at all in your practice with mental health diagnoses being funded by the insurance companies?
So in the general psychiatric division, I have seen like a lot of improvement. We are able to negotiate, like specifically with Medicare, Medicaid and Medicare, it's very open. Like we are able to negotiate coverage and we are able to provide services. But I think talking with Dr. Kaur here, I got this really acute concern, specifically in addiction, specifically in rehab and detox, where you have patients coming in who are suffering from their substance use issues. They want help and they want to get better. They want to get rid of this disease that's been ravaging their mental health, their physical health, their social health. And we are trying our best to kind of negotiate and help them. Unfortunately, as Dr. Jasleen clarified, if they have medical concerns like out of control blood pressure, they haven't been able to take care of your diabetes because of substance use, we are able to jump through the hoops that insurance has created to get them the support. However, if they have psychiatric issues that are complicating their addictions like PTSD, they kind of self-medicating with substances, the insurance kind of gives up, like, no, it's just psychiatric issue. We don't really focus more. In fact, if you look at the ASAM criteria, they mention that, hey, you guys should give weightage to psychiatric health, but they have interpreted them in a way, they have created checkboxes that we have to check through, and the checkboxes don't have any mental health related language.
And I also want to add that even if the patient is suffering from their addictions, that's something that's not a concern for insurance. If they have been incarcerated, lost everything in their life, from being a successful businessman to being homeless right now, that's not a criteria they are willing to consider. No, they have had multiple overdoses, had to be resuscitated. It doesn't matter. Yeah.
Thank you. It's very helpful. Your testimony was very helpful. Thank you.
Thank you, Senator Marks. Any other questions? Seeing none, thank you for your testimony today. All right, moving on to Jordan Fairchild, who I believe is online.
That's correct. Good afternoon, Senator Cabrera, members of the Insurance and Real Estate Committee. My name is Jordan Fairchild. I'm the Executive Director of Keep the Promise Coalition, which is a grassroots coalition of advocates with lived experience of mental distress, life-altering trauma, and psychiatric system involvement. We build community power for human rights, self-determination, and racial and social justice in Connecticut's mental health system. We're also a member of the Connecticut Parity Coalition. So I'm here today to testify in regards to SB 402, an act concerning mental health parity. We appreciate this committee's efforts to bring about mental health parity, including through Public Act 19-159, in 2019, which required private insurance plans to follow the regulations that were already set forth in the 2008 Federal Mental Health Parity and Addiction Equity Act. But we are really concerned about the fact that health insurance carriers are not complying with existing state and federal laws. When this happens, when these health carriers don't provide equal coverage for behavioral health benefits, it creates a barrier to care for many of our members. All too often, we hear from people who are seeking necessary mental health services and are denied coverage due to non-quantitative treatment limitations. And when people can't get the help that they want and need, it really does cost lives. So while we appreciate the intent of this bill, the current language doesn't go far enough to ensure meaningful adherence to the existing mental health parity statutes. Therefore, we're requesting, along with the other members of the Connecticut Parity Coalition, that the committee implement the attached substitute language attached to my testimony, that is, from the Connecticut Parity Coalition, to give the insurance department the tools to hold health carriers actually accountable and implement fines as an enforcement mechanism when they are found to be non-compliant with our existing parity laws. Thank you for the opportunity to testify today.
Thank you. Thank you so much. Are there any questions? Thank you for testifying today. Oh, Senator Marks, sorry, I keep missing it. Promise it's not on purpose. Go ahead.
I have another meeting, so I want to get all my questions out in the beginning. Hey, thank you, Jordan, for being here and for testifying. So in the substitute language, with the funds that will be collected through this, where will those funds, do you know what the designation of those funds will be?
So I don't believe that that's been named. And this was I can't speak on behalf of the rest of the coalition. I believe one of the ideas that was floated was actually providing assistance for low-income folks who are trying to access care. Though, you know, that decision on where to use the funds is up to the committee.
It is. I just thought you might have a recommendation. Yeah. Okay. Thanks for your testimony and for all your hard work.
Thank you.
Thank you, Senator Marks. Any other questions? Seeing none. Thank you so much for your testimony today.
Thank you.
You're welcome. Moving on, I believe Dr. Emmel is online.
I am here.
Right ahead, sir.
Thank you. Senator Cabrera, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Dr. David Emmel, and I'm the legislative chairperson for the Connecticut State Medical Society. I'm here today to comment on two bills, Senate Bill 405 and 401. The State Medical Society supports Senate Bill 405. This bill tackles the concerning trend of health insurers automatically downcoding health benefit claims. Downcoding involves insurers unilaterally reducing billing codes submitted by physicians without notice. For instance, a claim for a comprehensive patient consultation that might include multiple organ systems may be downcoded to a basic office visit that would cover just one organ system. Automatic downcoding prioritizes cost saving over patient care and jeopardizes the fair compensation of medical services. This practice not only imposes financial strains on physicians, but also adds administrative burdens, as physicians must spend time and energy appealing each and every instance of downcoding, not en masse as the insurers are able to do with a push of a button, but one claim at a time, diverting energy and time away from patient care. Senate Bill 405 aims to halt this practice by prohibiting insurers from automatically downcoding claims. It ensures fair reimbursement for physicians and unimpeded access to quality health care for patients. We urge you to support this crucial legislation. See, the State Medical Society, opposes sections of Senate Bill 401, specifically the section that proposes to include telemedicine networks as a component of network adequacy standards. Commercial telehealth companies have surged in popularity, offering virtual healthcare that prioritizes convenience over continuity and quality of care. This fragmented approach to care ultimately undermines the establishment of a cohesive care plan, risking patient safety and outcomes. Commercial telehealth providers lack community ties and incentives for developing lasting patient-physician relationships, hindering comprehensive care. Additionally, there are limitations in conducting physical exams and interpreting nonverbal cues, pose challenges to accurate diagnosis and treatment. The State Medical Society supports the extension of telehealth protections, recognizing its invaluable role in maintaining continuity of care and promoting equitable access to healthcare. However, we remain in strong opposition to the inclusion of telehealth networks in network adequacy standards for commercial health insurance. It really is a very concerning issue to us. And I think if this law were to go through, it would produce a powerful incentive to further narrow panels. And it was narrow insurance panels that really were the cause of out-of-network surprise billing. So if this bill passes, I'm very worried that we're going to see a whole new cycle of physicians being left out of network, struggling either to survive, joining the large entities, or raising their billing and going out of network, creating more problems. This is something we can avoid very simply by doing what's right and supporting the telehealth that's good for patients with their physicians in Connecticut, and not relying on telehealth physicians. Thank you for your time and your interest, and I'm happy to answer any questions.
Thank you very much for your testimony. I have a quick question on what you said on SB 405, some of the downcoding. Is there any data that the society has on how much administrative time is actually being spent, or do you have any kind of other kind of information on that? Curious to see how big a problem that is for you.
I don't have it at my fingertips, but I'm sure the society can research that, and we'll try to get back to you with some real numbers. But I can tell you some history. Back in the 90s, we went through all of this, and it resulted in a gigantic lawsuit. It involved half a dozen or more states, and the state medical societies would have won that lawsuit, except our funds were essentially exhausted fighting against the gigantic budgets that big insurance companies have. The lawsuit resulted in a settlement that unfortunately included a sunset provision. So for 5 or more years after that settlement, we enjoyed much better treatment from the insurance companies, including not being downcoded. But now it's coming back, and I expect other of the egregious practices that are so easy for insurance companies to do and so hard for physicians one at a time to fight back against, they're going to start appearing even more.
Walk me through how it happens. Can you take me into the how exactly it happens? Are you made aware? Are you notified, or is it just something you have to figure out on your own that you're downcoded?
Well, usually what happens, the physician codes it in the office. We do an exam. Everything in the software is designed to code it correctly. It gets submitted, and then we usually hear from office managers who come back and tell us that, that code, that service that you did that was a consult for such and such a patient, they downcoded that to a routine sort of examination and not the full consult service that was performed.
So at that point, your choice is to jump into the appeal process that's there for you.
Yeah, and that has to be done one at a time. You can't say we have 35 episodes where we feel it was inappropriately downcoded, and we'd like you to look at these. You have to do each one individually. That's a painstaking process. It takes up a lot of employee time.
When you say each
and
one,
physician time,
code or each patient?
Well, it would be each service.
Each service. Okay. Okay. Thank you. Are there any other questions? No. Oh, Senator Anwar, you're online. Go ahead, sir.
Thank you so much. Thank you, Dr. Emil, for your testimony. I think you're mentioning about the fact that if the bill for the telehealth is passed, that is going to result in the one that you're speaking of, that would actually have a detrimental effect on the people who are providing care. Could you explain that again a little bit, please, if you don't mind?
Well, what I'm concerned about is, if take a specialty like, neurology, we figure out that the state needs 20 neurologists, to complete an adequate network, or an insurance company for coverage determines that. They then go online and find half a dozen who are online in Nevada, Iowa, Indiana, you name it. And now they don't need a half a dozen more brick and mortar physicians in Connecticut who can go to emergency rooms, see patients, who will take the time to really do the consultations and to take care of the patient's needs. They're just getting piecemeal, fragmented coverage through telehealth. And it's going to put some of these physicians out of business. It's going to drive others into the large entities or into private equity. So that's where the harm occurs. We're seeing a lot of burnout from this process. Physicians who feel like they're being taken away from their patients and patient care, and not being able to do what they were trained to do.
Thank you so much. This is helpful because we do have a public health committee bill on telehealth as well that we just passed out of committee yesterday, but we appreciate your insight. Thank you.
You're very welcome. And it's not even inconceivable that some guy in Idaho could be on 50 panels if this sort of thing were to spread to other states. And you can imagine what it would be like, how accessible and available a physician would be if that were the case. How do you monitor this sort of thing? It's impossible.
Thank you, Mr. Chair.
Thank you, Senator. Any other questions for Dr. Emil? Nope, see none. Thank you, Dr. Emil, for your testimony today. We appreciate it.
Thank you.
Up next, we have in person Joe Nichols. Good afternoon.
Good afternoon. My name is Joan Nichols. I'm the Executive Director for Connecticut Farm Bureau Association. Representative Wood, Senator Cabrera, Representative Barry, Senator Anwan, members of the Insurance and Real Estate Committee. I'm here today to ask your support of House Bill 5462, an act requiring a study of civil liability protection for farmers offering agritourism activities in the state. Connecticut Farm Bureau urges your support. Agritourism is a form of commercial enterprise that links agricultural production and/or processing with tourism to attract visitors onto our farms, ranches, or agricultural businesses for the purposes of entertaining or educating visitors while they're visiting the farm. And it generally will help diversify farm income. Agritourism is a vital component for over 200 Connecticut farm businesses. According to the newly released 2022 USDA Census of Agriculture, 206 Connecticut farms reported an average revenue of $66,671 from revenue generated from agricultural activities. Agritourism helps diversify farm income. Customers that engage in agritourism activities learn to appreciate what farms bring to the quality of life in Connecticut in terms of open space and what it takes to produce the fresh, locally grown produce that we've all learned to enjoy. According to the National Agricultural Law Center, over half of the states in the United States have enacted statutes that specifically address agritourism. There's actually around 39 states that have statutes that also speak to similar legislation. These statutes protect against the inherent risk associated with running an agritourism operation, such as the condition of the land or the buildings. Many have an exception disallowing the use of their use if the operator is negligent or grossly negligent in the running of the agritourism business. Many states require that agritourism operators post warning signs with specific language that is included in the statute. Failure to comply with the agritourism statute may limit its usefulness as defense. We realize that this particular bill speaks to the study that should be done between the Commissioner of Economic Development and our Commissioner of Agriculture. We're hoping that the goal of all of this is to pass legislation similar to over 25 states in the United States that will provide some protection for our farmers who engage in agritourism. And I'm happy to answer any questions. Thank you.
Thank you so much for your testimony today. I really appreciate it.
Thank you.
On a personal note, I live near a farm called Hamlinger Farm, and during COVID, we used it a lot because it was outdoors, and they do lots of things, like I'm sure lots of farms do. They have all kinds of activities for children. What kind of protections do they currently have access to? Because I am seeing more and more farms doing a lot more than just farming, and they have a lot of people on their property, a lot of cars on their property.
Sure. Well, I certainly appreciate that you're supporting your local farm in your community. So what we tend to think about are fall festivals, pick your own operations, corn mazes, for instance. Ultimately, they're going to harvest the corn once the corn maze is over and utilize the corn for feed, but in the fall, it's a nice opportunity to bring families to the farm. So it's those types of operations. And the purpose of these particular laws is that when you visit a farm, as you visited the Hindegers, there is an inherent risk associated with a farm. The ground could be a little uneven. There's livestock sometimes on a farm, there are farm buildings. So there's a certain risk in going to a property that's a working farm. And our farmers do everything possible to make it as safe as possible for their visitors. They're well insured. They have plenty of staff to guide visitors through the farm. They do a risk management assessment to make sure that everything's possible to make it as safe and as enjoyable an experience as possible. But a farm's a farm. And the example that I was recently given by one of our really good farmers in southeastern Connecticut, where I live, is there was a woman that damaged her foot in the course of picking apples, and it's because she stepped on an apple tree root. Apple trees have roots. And when you're near an apple tree and you're picking apples, it wouldn't be unusual that you might be stepping on roots. But she damaged her foot and it caused a problem for the farm. Those are the types of inherent risks that we're talking about.
Thank you. Thank you for that. Any questions? Representative Meskers, you're online. How are you, sir?
Thank you. I'm doing well. I'll be down to ghost you in a couple of minutes. I'm up in my office right now. I want to thank the good lady for her testimony, and only complain that she hasn't shown up in front of Commerce, because I think the legislation is good, and I'd love to hear her and talk about other ways we can help in the state. I think if we look at the issues of our food supply, our carbon footprint, our farm to table, and the overall benefits of local farms to our environment and to our economy, I can't think of anything more important than supporting them. When we sit here, I think Representative Foster has come out and commented, you know, and we shouldn't escape us that we've had 50 and 60 degree days. The stress on our farming communities in this climate change era is legion. So anything we can do to support our farms and keep them in the business and to facilitate them from frivolous lawsuits, I think is important. So I want to thank the good lady for her testimony and you know, be recognized in support of the bill. Thanks.
Thank you, Representative. Representative Berry.
Thank you, Mr. Chair. Thank you, Joan, for being here. Always good to see you. The last year or two, probably even more than that, have been tough on our farms. How are your members bouncing back, and are they bouncing back?
I think 2024 is going to be is going to be a tipping point, and I really don't mean to sound so grim about this, but we've had farms that for, you know, over the last 10 years have had at least 3 instances of catastrophic losses, either to extreme drought or extreme flooding. We have very high pressure on the limited amount of farmland that we have left in the state. Farmland prices are escalating at an astronomical rate. And our input costs continue to increase in terms of labor costs, if you can even get the labor, and all of the things that we've been talking about. So I agree with the comments of the gentleman representative that just spoke. I think the state of Connecticut, if you really value your farms and the open space and everything that they contribute, we need to take every step possible to help these farms. And if a bill like this will help so that our farmers are not stressed with frivolous lawsuit when they're already stressed just to run their farms, would be a huge step forward. And if over 25 states had not already done this, one of the laws that we really like is the state of Maine, and that law was passed was signed into law by Governor LePage in 2012. So we have laws that have been on the books for well over a decade. And in the states that have passed these types of laws like Maine, the amount of frivolous lawsuits has plummeted. And that has a huge impact on our ability of our farmers to focus on what they really want to do, which is farm.
Thank you. My community definitely supports our farmers.
Thank you.
Thank you.
Thank you, Representative. Are there any other questions? Seeing none. Thank you so much for coming to testify
Okay.
today.
Thank you
Appreciate
very
it.
much.
Up next is Ms. Brooke Foley. Good afternoon.
Good afternoon, chairpersons, ranking members, and distinguished members of the committee. My name is Brooke Foley. I'm from the Insurance Association of Connecticut. I'm here with Melissa Biggs. She represents AHIP. And we are also here with Jan Gravener from the American Council of Life Insurers, who will talk about how we are opposed to Senate Bill 406, an act concerning long-term care insurance. And Jan is going to testify. I promise it'll be quicker this way.
Hi, Jan.
Okay, hi, can you hear me okay?
We can hear you. Yes, go ahead.
Okay, I'm Jan Graber. I'm an actuary at the ACLI, and thank you for the opportunity to testify on Senate Bill 406. This is a complex issue, and it's important to acknowledge that NAIC Long-Term Care Actuarial Working Group chaired by Paul Lombardo, who is Director of the Life and Health Division at the Connecticut Insurance Department, is currently discussing the challenges associated with large rate increases on long-term care policies, and specifically relating to large rate increases implemented on older age policyholders. ACLI has and will continue to engage in that process. Insurance products, including long-term care policies, require actuarially sound premium rates to ensure their financial sustainability. Restrictions limiting actuarially justified rate increases based on specific criteria such as age or lifetime premium increases may seem like a protective measure for consumers. However, it risks creating financial instability for insurers, potentially impacting their ability to fulfill commitments to policyholders. Actuaries are bound by actuarial standards of practice, which govern the work of actuaries and provide a framework for consistent and uniform actuarial practices. These standards expect actuaries to use sound actuarial judgment in making reasonable and well-supported assumptions and in applying relevant factors that reflect the unique characteristics of the block. We do recognize that on a case-by-case basis, some limitations may be appropriate. However, an across-the-board limitation that doesn't take into account the unique characteristics of the block ignores the foundational actuarial principles necessary to appropriately assess risk. In addition, long-term care policies are guaranteed renewable products, which ensure that policyholders' policies won't be canceled, but they do not guarantee fixed premium rates. So limiting insurers' ability to adjust premium in response to changing risk factors can disrupt the balance between premiums collected and claims paid out, jeopardizing the financial stability of insurers. In addition, long-term care policies are designed to provide coverage for an extended period, often spanning decades. Actuarially justified premium rate increases are necessary to ensure that the coverage remains sustainable over time. And without that flexibility to adjust premiums, insurers may become reluctant to offer guaranteed renewable products, leading to a reduction in consumer choice and leaving individuals without adequate protection against the financial risk associated with long-term care needs. So in conclusion, we acknowledge the concerns about protecting consumers from excessive premium rate hikes, especially older age policyholders, and any legislation should really strike a balance that considers both the actuarial realities of the insurance industry and the long-term interests of policyholders. So thank you for your time and consideration. I'm happy to answer any questions.
Thank you very much for your testimony. Representative Pavlik-Viado.
And thank you for your testimony. I'd like to also thank both of you for coming. So this is a bill that of course comes every year, and every year we look for a solution. And I don't know if this is it, but for the individual, and I understand that, not having any policy at all after somebody has been putting in for years isn't a good option as well. But what do you suggest? What can we do? Because I know I hear from people who have their premiums increase so much and it's still a huge burden for them.
Right. What I will say is it's a challenge. It's not a one size fits all kind of solution. There's not an easy solution to it. But what is happening is there is a lot of work that's being done at the NAIC, both with regulators and industry and consumer representatives. And we recognize the problem with large rate increases, and we're working on a solution. And I feel like that we're going to get to a place where both sides can be happy. And we're there, insurers are there for consumers and able to pay claims. But it's not an easy fix, and it's definitely not a one size fits all fix. And I think that trying to apply kind of an across the board restriction really causes more harm than good potentially.
And I get that and I understand and it's, difficult for us too. But are there alternative policies? Are you, trying different things? I don't know, in some type of smaller market, just to, of course, I'm not sure. It's the thing is, it's a long-term issue, right? And I mean, we've gone over this in 100 different ways and just really haven't, and understand you're in a rock and a hard place and haven't been able to come up with anything. So I'm just hoping, there's something a little more definable that we can go back to our constituents with.
Well, and I will say, nobody likes these big increases, right? We don't like them, consumers don't like them. However, with, that said, what our data shows is despite these large increases, consumers are holding on to their insurance products. They are not dropping coverage. And if they were to drop coverage, they still receive a benefit equal to the premiums that they have paid in. But most realize the kind of value proposition. So for example, you might have a person that, yes, they put $70,000 into a standalone long-term care policy. However, a lot of these policies that are older policies had lifetime benefits. They had compound inflation protection. So when you do a comparison about of the premium that you put in, yes, you might put $50,000, $60,000, $70,000 in the premium in the for coverage. You have that coverage, and your potential claims could be well over $1 million to $2 million. So people with dementia are living longer. There's changes in provider settings. So back when these policies were originally priced, most people went into a nursing home and most people didn't want to go into a nursing home. And then their life expectancy once they entered a nursing home was, 2 or 3 years. And now what we're seeing is these people that have lifetime benefits. I mean, they'll start out in an assisted living facility and they may live then 10 more years. And so we had to adjust rates for that change in, life expectancy and provider setting, and just to ensure that we have enough money to pay claims when they come due. And so, going back to what I originally had said, nobody likes the large increases, and and there are options when somebody is facing a large increase. So policyholders, if they do have, they may realize that I don't need 5% compound inflation, or I don't need a lifetime benefit. Maybe I just need a 5-year benefit period, or maybe I can drop down to 2% or 2.5% inflation protection. And most of the times policyholders are able to mitigate some, if not all, of the premium increase.
Okay, I think the ladies.
I was going to add, Jan is the expert here, so I'm going to defer to her for most of it. But I wanted to say this is not a Connecticut problem. This is a nationwide problem. Other states have looked at how we can address the cost of the rising premium for the consumer on that perspective, while providing either a tax deduction or some way of socializing that cost on the consumer front, understanding that the rate increases are required to ensure that they have a product they can fall back on afterwards.
Yeah, I there was a gentleman who testified, maybe it was last year or the year before, and he, I think we went a little bit more in depth of some other options and what other
There
states
was
are
a
doing.
panel last year, I believe, ACLI and AHIP was a part of, that talked about other options. I mean, you could throw some ARPA money there and just reduce premiums for everyone. If you
Yeah,
want.
yeah, that would be nice. So, I mean, we'll continue to work on it, but I do appreciate your testimony today, so thank you. Anything else you want to add, by the way, Jan, or to the ladies in the front? All right, thank you.
Thank you so much. Representative Mesker is in the flesh.
I threatened you. I told you I'd be here. Any questions or thoughts on modeling of the benefit? Normally on the long-term care policies, what I see is that the maximum amount of the premium that's awarded to a person deals with facility fees. And normally both an unlicensed or at home. And I think there's probably a problem on a regulatory framework to be able to certify that the service is being rendered. But I find that the discrepancy in the payment is enormous. So you might deal with a 1,000, 3,000, 4,000 monthly allowance or 5,000 monthly allowance with a 5-year term, where it might be going from 100 to 200 a day down to 25 a day. And given that, in many cases, we're dealing with memory care issues. In many cases, we're dealing with assisted living, which is not necessarily needs a trained, skilled nursing assistant, but sometimes it's daily life. I'm not sure that we built the right products, and I don't know how we encourage that in the state. Or you have any thoughts or on the broad topic for long-term care?
I'll let Jan take the first stab at that apple if she's okay with it.
Sure. So you're asking what kind of innovations are taking place in the long-term care market?
Yeah, it seems very, let me make it clear, Jan, since you're there. It seems very cookie cutter when I look at the benefit packages. They're all related to and seem geared, at least the older policies I see are all geared towards institutional care. And institutional care is going anywhere between $5,000, $6,000, $7,000 to $14,000 or $18,000 a month. And I see a really scaled and defensive or de minimis compensation for at-home care. And I'm wondering if there are innovations there we should be looking at or trying to foster in the industry.
I know that a lot of companies have looked at wellness programs, both pre-claim and post-claim wellness programs, because there have been studies that show that people really prefer to stay in their homes, and so there have been companies that have offered these wellness programs. Have someone come in and assess your house for fall risk and that kind of thing. And so the problem with these pre-claim wellness programs is companies cannot use claim dollars to pay for those benefits, because benefits have to be triggered first. And so a lot of times companies are coming in and they're making, they're allowing people or are assessing, their home for, different levels of care, or like I said, assessing like a fall risk. What I've heard is once someone is on claim, the wellness programs don't have as much of an impact. But we can get, I can check with our companies and see kind of what kind of innovative things they are doing in this space. What I've heard is, this doesn't help these legacy blocks that are already, out there, have been issued. The terms of the policy are pretty much set in stone, but there are innovations taking place with like co-pays or as I mentioned, wellness benefits. And then, there is a huge growth in the combination products, the long-term care accelerated death benefit products, where you can accelerate a death benefit on your life insurance policy to pay for long-term care needs if you trigger those benefits. And so that's kind of growing in popularity, because there is a benefit either way, right? It's you have the coverage, you can access your death benefit if you trigger long-term care needs, or if you don't, then your death benefit is available to your beneficiary. So there's from what I've heard, there's a whole lot of innovation taking place in the long-term care space, just simply because people are recognizing, the need and the future need and the potential burden on state Medicaid programs if people are not able to take care of their own long-term care needs.
Yeah, and so I don't think you answered my question specifically, so I'll be direct.
Okay.
It's innovations and new product. I'd love you to approach our committee to look at. The issue becomes the alternatives tend to be institutional care with the highest remuneration on a per diem and a very sharply scaled back benefit for at-home care. Whereas everywhere I go around the state, home care seems to be the highest alternative that people would prefer. So it's not, am I doing my yoga or hot yoga or doing whatever so I don't fall over and maintain my independence up until the point of dependency. It's at the point of dependency. Can I look at a product and can we investigate the ability for a product that the differentiation between home care versus institutional or the payment is similar? Because I have many people who would prefer to draw down and stay home and be independent. One, with certified help, and in some cases with not so certified help, because it's someone who can figure out my stove and cook for me and make my bed and do my laundry. It isn't someone who's necessarily drawing blood or doing medical. And the question is, can we make that flexible going forward? Because as we're trying to save the state, we also don't want to trap people into your only alternative to draw on your plan successfully is on an institutional basis. And that's my criticism. So, and I know we can't rewrite the policies that have been issued, but I think our people need those options going forward. So I just have thought it's kind of not meant to grandstand or grab the rest of the testimony. I'd love to, I'll take advantage of the fact you're here to ask if you would give us some information on what other types of policies might be coming down the works or down the pipeline, okay? But thank you, Mr. Chair.
I will check with my member companies and we can follow up with you.
Okay.
Thank you.
Thank you, Representative. Representative Denny's online. He's been very patient. Please proceed, sir.
Oh, thank you, Mr. Chair. Just so I understand how this works, because this complaint about the increases is one of the most common that I'm experiencing in my district. And as people age, they buy these plans basically when they're younger.
Truly losing weight.
And they're, excuse me.
Secret.
I'm having my water heater replaced, so I'm watching all this get done. And so as you sell these policies, they're buying them younger. As people get older, their cost goes up exponentially, and eventually they can't afford them anymore, so they're bailing out. So the more people who leave these pool of policies actually costs the remaining people more money, correct? And adds to the cost increase.
Well, I think that you kind of hit on the problem is when these were priced, we thought that our assumption was that a certain percentage, say 7% or 10%, would drop their coverage. And the premium and the reserves that have been built up on that premium stay in the pool for the remaining policyholders. The problem is that people are not lapsing their policies. Ultimate lapse rates are under 1%. And so that's where a big part of the assumptions were off, because all of a sudden, instead of having, 10,000 people that trigger benefits, you have 30,000 or 40,000. And so that lapse assumption really threw the premiums off when they were initially priced. Today, we know that the lapse assumptions are going to be 1%. So now, products that are priced today are not as underpriced as what happened in the 1970s and 80s.
And so that explains why you're looking to take a loss on the people who bought those plans in the past and are now paying increases and not lapsing. So when you go to sell these products, are you letting everybody know that this has happened in the past and that people who bought them in the past are now paying exorbitant increases, so that there's at least an awareness and transparency to the marketplace that this is happening?
Right. So there is a requirement in the NAIC model regulation that for new applicants, carriers are required to provide them with a 10-year rate history on similar products, so that when you are working with a company, you can see what kind of historical rate increases the company has applied to existing policies.
And that's the most recent increases, or just a 10-year period?
I think it's just the past 10 years.
Okay.
But I'll double check on that. I don't know.
Okay.
If it's complete history or just the past 10 years.
Because I understand what you're talking about, that there was these policies were sold on actuarial facts that at the time did not hold up, and that you are looking to take a loss, and that paying into it is the only option. And we have talked with some people about you can buy down your benefits or take less benefits, which I think is an option for some people. My concern is, if you're going to continue to offer this as a product, how do you protect people from this happening to them 30 years from now? And that's more my concern.
Right. And like I said, our expectation is that policies that are priced today, the standalone policies, we do not expect to see the same magnitude of rate increases that we've seen on these products that were priced back in the 80s. And then you might see, depending on how like the combination product is structured, you may have an increase on the long-term care piece, but it's not to the magnitude that we're seeing on the standalone products, just because that those combination products, the company is going to pay that benefit one way or the other. So that kind of mitigates some of that risk of, a much higher level of claims than you anticipated.
Thank you for taking my question. Thank you, Mr. Chair.
Thank you, Representative. Any other questions? I'll just ask one really quickly. I'm sure you can sense our frustration around this issue. It's because we've heard from our constituents quite a bit about it, and myself, I've sat down with multiple constituents, their policies, and they have shared with me, in some cases, double-digit increase in premiums at a time in their lives where their income goes down or is severely curtailed because they're retired. You talked a little bit about some of the solutions the industry is working on, and I know that it's a delicate balance, and it does. I think it was Representative D'Amato used the term rock and a hard place, and it does feel that way. It just feels like we're stuck between a rock and a hard place. And I was wondering, with the trend line of dementia and Alzheimer's going up, we all know people are going to need more care for longer periods of time. What you forecast in terms of what this industry looks like in the future, because it seems like there's no real good solution. So I was hoping, and that's a broad statement or question, and you don't have to answer, but
I think it's a very fair statement, and I think we all appreciate what you're hearing back from your constituents. We understand that this is an issue, and this is feedback you're receiving real time from multiple constituents on a regular basis. So I think we understand the seriousness of the issue. I am going to defer to Jan on moving forward on how we can ensure that this is not a continual problem for the new policies coming up as well.
Okay.
Right. A lot of the problem would be, we need to be able, as carriers, need to be able to get our premium rates to an appropriate level reflective of the risk. And once that happens, I think it's a little bit more, stable. However, if the actuarially justified rate increase is 100%. And I know that sounds like a lot. And I will tell you that I spent 20 years at the Texas Department of Insurance as their chief actuary. So I've been in your shoe, not in your exact shoes, but I've talked to legislators, I've talked to consumers about these big increases. And I think that if we can get to an actuarially justified rate, like I was saying, if it's a rate increase of 100%, but then the state only approves, 10 or 20, we're still behind. And so we're continuing to pay out claims, but we're not collecting enough premium to cover those anticipated claims. And so until there's kind of this balance between premiums and expected claims, we might still see some wide fluctuation. But I think we have a much better handle on the assumptions underlying long-term care that we didn't have when this product was initially priced.
Okay. We look forward to more conversation, as I'm sure, since it's something that we're trying to solve for a long time. Any other questions? No, seeing none. Thank you so much, guys. Appreciate your help. Up next is Loretta J.
Thank you. Good afternoon. My name is Loretta J. and I live in Fairfield. Thank you for this opportunity to speak with you today. Today, I ask for your vote to support SB 402, which is the Mental Health Parity Bill, with the substitutions that are offered by the Mental Health Parity Coalition. To illustrate why passing this bill is important, I'll share two stories. Recently, I was trying to get free authorization for an out-of-network therapist. This is because there are limited in-network therapists. To get any reimbursement, our family's healthcare plan required that the out-of-network therapist contact them directly with a service code before they even had any contact with me. The insurance company refused a code from my regular doctor or from me or on a claim form. And there are three ways that this is problematic. First of all, a provider cannot determine what a service code would be prior to having contact with the patient. That would be unethical and fraudulent and against good practice. And non-mental health medical providers do not have such a prerequisite. And then by definition, out-of-network providers do not deal with insurance companies. That's what makes them out-of-network. So this requirement creates an unrealistic demand. I'm fortunate that I was able to manage these roadblocks, but others are not so lucky. Professionally, I'm a special education advocate, and I work with youth who have behavioral health challenges. Repeatedly, I've seen parents struggle to secure necessary mental health care for their children. While dealing with their child in crisis, they must also navigate burdensome expectations and inconsistent messaging, and these delays prevent access to care. When one of my clients needed residential treatment for their daughter, their insurance company required that they pay a $1,000 admission fee to the program. This was in addition to their copay and in addition to their coinsurance. Moreover, it was not applied toward their annual deductible. And then 3 months later, during the same calendar year, the same teen had to re-enter the same program. And again, the insurance required another $1,000 admission fee. Again, it was not applied toward their deductible, and it was not considered part of their coinsurance. These costs created unnecessary hardships for this family that was already struggling to pay their bills. So when insurance companies treat mental health differently than other medical services, it hurts people. This discrimination exhausts families financially and emotionally. So I ask you to remedy this. Passing SB 402 with the suggested changes will protect and care for our community by enforcing the existing parity laws so that insurance coverage is fair. I thank you and I welcome your questions.
Thank you so much for your testimony. Are there any questions? Representative Pavlik Damato.
Yes, the situation that you gave, what type of, that was private insurance through an employer?
Both of these were private insurance. They were both actually, I don't know, am I allowed to name them? They were both private insurance, yes.
And you said it also wasn't counting towards their deductible, correct?
Correct.
And do you know why that was?
This was something that I was very actively involved with, trying to advocate for the family. The insurance plan said this is their admissions fee, and that is just the way that was their policy. The provider said this was an insurance-driven decision, and that was just it. It was in addition to their copay, in addition to their coinsurance, and not part of their deductible.
And so you're saying the admission fee was that was by the insurance company?
By the insurance company. That was so that the family was billed. They received the bill from the provider, and the provider said it came from the insurance company. Follow up with the insurance company, confirm that. And to rub salt in the wound, it required the second $1,000 admission fee. That's because the insurance determined after the first admission that the child was ready to be discharged. The provider did not think she was ready, but the insurance said their coverage is ending. They were ending her coverage. And then she was discharged, had to be readmitted another $1,000 later, all driven by that insurance company.
And did you provide your contact information in your testimony?
Yes.
All right.
I did. I'm happy to follow up.
Okay. Yeah, I'd like to reach out to you and just maybe get a little bit more information, because I think that's something we can definitely address. So I appreciate your testimony.
Thank you very much.
Thank you, Representative Meskers.
So I'll drill in. It's funny from a different point of view, and I obviously want to encourage you to keep your confidentiality with your client. Do you know if the insurance was a self-insured plan, a corporate plan, or if it was on the Connecticut Exchange, or where it goes?
The first one, my personal, was using Obamacare, so that was through a
Yeah, that would have been through the exchange.
Through the exchange, and the second one was through an employer.
Okay. Just as the public listens to us today and we sit here and wrestle with issues, I think we probably have stated this a number of times. We live in a federal system, and this goes back to the days when I was a child in interstate banking, but it stays with insurance. That is, insurance is highly regulated at the local level, but that coverage tends to be on official insurance products that are regulated by the state, which is at this point, I believe, something on the order of 15 to 20% of the insured product in the state. Majority of the programs with corporations are self-insured and therefore don't fall within our purview. They might be under ERISA or in federal programs. So we may or may not have an ability to influence with some of our regulatory changes. So we'd have to look at the individual policies and see whether it's the scope of our committee and of the state. So I caution you. I know we can affect the exchange listed products because they're regulated by the state, the employee plans of the state, individual plans that are purchased through the exchange, but I'm not sure on the self-insured products how much influence we have. So just as I mentioned that in a comment, because it sounds like we might have opportunity to investigate and remedy and see on the first case, and the second case we may not be able to help you at all.
So Representative Meskers, thank you very much. Because of the U.S. parity laws, federal parity laws, does that influence that decision? We're just looking for enforcement of these laws.
So now you're taking me, I was a banker, so you're taking me over my skis on enforcement. What I can tell you is I don't have a regulatory authority. So if there is a violation of the federal code, you're better off asking a lawyer about that, about the recourse, because you certainly can't use state law for in and of itself against, things that aren't regulated at the state level. So that would be, it's tricky even for me, asking me after 5 years in the assembly, but I have to always be cognizant of our scope of influence.
Thank you, Representative. Any other questions? Seeing none, thank you very much for your testimony today.
Thank you.
Up next is Ms. Kathy Flaherty. Good afternoon.
Good afternoon, Senator Cabrera and members of the Insurance and Real Estate Committee. My name is Kathy Flaherty. I'm the Executive Director of Connecticut Legal Rights Project, and we provide legal services to DMIS clients. CLRP is part of the Connecticut Parity Coalition, and I am here testifying in support of Senate Bill 402 with suggested language revisions. In an ideal world, this bill actually would not be necessary, because we passed mental health parity on the federal level decades ago, 2008, and we passed a state law in 2019. But we know, and especially if you look at the testimony submitted by the Attorney General, insurance companies are either not complying with the law, not answering the questions with the survey the insurance commissioner already does of them, and there's no way to tell they're in compliance. There's reason to believe that they're not. Experiences like the experiences we heard from Loretta are, examples of some of the things that people have experienced. I'm somebody who has relied on insurance coverage to deal with my mental health condition, and there have been times, admittedly for me in the past, where it was a difficulty to get things covered. But the key thing is we want to give the insurance commissioner of this state the ability to hold these insurance companies accountable to the public. They're supposed to be following the law and they're not. So this would give the insurance commissioner some additional tools. And I thank the committee for raising the bill, and I hope you consider adding the additional language.
Thank you very much for your testimony. Are there any questions? First of all, thank you for testifying, and really happy that you're doing well. Could you walk us through a little bit about your experience with dealing with this, and what were some of the hurdles you faced?
Well, it's the challenge of when you're inpatient that the provider, and it's not something you necessarily know is going on as a patient, you find out after the fact, that they're fighting every day to keep you inpatient because they think you need to be there, but the insurance company is saying no, discharge her. It has been issues where difficulty getting certain medications covered because of the major treatment non-compliance, but non-response to recommended treatment, and trying a lot of different medications and being on very expensive medications at the end of the day. I think it's seen that when basically treating mental health conditions different from the rest of the body. And we're all one body and mind is very connected. And especially at a time where we really are focused on a crisis that exists with mental health, when parity rules aren't enforced and providers have difficulty getting paid because of insurance companies, that there will come a time where there's already an issue where a lot of providers don't participate with insurance because of all the hassles that they have to deal with. This will make those providers that continue to deal with insurance even less likely to do that.
Thank you very much. Any questions? Thank you for coming today, and thank you for
Thank you.
testimony. Up next, I believe online, is Mr. Mark Spellman. Hi, Dr. Spellman, how are you? Can you hear me?
Yes, thank you. I could have just been talking away on mute. I'm sorry. Good afternoon, Senator Cabrera, Representative Wood, Senator Huang, Representative Pavel-Octomato, and members of the Insurance and Real Estate Committee. Thank you for the opportunity to testify. My name is Mark Spellman. I'm a clinical psychologist in New Fairfield. I'm here to share my comments on Senate Bill 402, an act concerning mental health parity. I'm testifying on behalf of the Connecticut Psychological Association, and we are part of the Connecticut Parity Coalition. And I would like to say I totally support and endorse everything the previous speaker just said. You know, I was here almost 5 years ago to the day in front of this committee testifying in support of the mental health parity bill that the legislature ultimately passed in 2019. That day, we heard powerful testimony from 2 young lawyers who were afraid to leave Husky coverage because they suffer bipolar disorder and were afraid to risk being without insurance coverage, which they would if they returned to practice. It's been 5 years. I haven't forgotten a word of their testimony. I testified about my own experiences of patients going off, if you will, the Husky cliff, where we work to support their independence and employment. And as soon as they achieve that, they lose their Husky coverage and lose the ability to continue their mental health treatment to protect and support their gains. But we won, and we thought we'd won a great victory. And we really hoped that the insurance companies would respect the will of the legislature and comply with mental health parity. But we knew there wasn't much of an enforcement provision to that bill. But we hoped that they would respect the will of the legislature. Well, here we are 5 years later, and we see that's not the case. Failure to comply with parity limits access. The non-compliance of insurance companies has been demonstrated by the reports that you have received. We saw what happened when insurance companies were supposed to report on their compliance. And in 2021, they didn't follow the template of the commissioner. They gave us a data dump that we couldn't be used. So we need an enforcement provision, and I'm hoping that you will accept language recommended by the Connecticut Parity Coalition specifying penalties for carriers. Our experiences in the last 5 years show beyond any doubt penalties are necessary to achieve compliance. I'd also like to briefly address the question I heard from Senator Marks a few minutes ago about where penalties could best be used, and that would be to support those hurt most by non-compliance. From my perspective, albeit limited, that's people falling off the Husky cliff, people who are able to achieve independence and self-sufficiency with the supportive treatment they receive, supported by Husky, but then are unable to continue because they can't get the same kind of insurance that they had before. Thank you for your time and listening to my testimony. Please support the alternative language proposed by the Parity Coalition. Thank you.
Thank you. Thank you very much. Are there any questions? Online, seeing none. Thank you so much for coming today. Up next is Catherine Kennedy, who I believe is online.
Yes, hi,
Hi,
how are you?
proceed.
Okay, I will start. I thought there was a number 11, but I'll go ahead. So good afternoon, esteemed chairs and members of the Insurance and Real Estate Committee. My name is Catherine Kennedy, and I'm a physician practicing psychiatry in New Haven. I reside in Brantford and am on the clinical faculty at Yale. I also serve as the chair of the Council on Advocacy and Government Relations for the American Psychiatric Association, but these opinions are my own. I'm not speaking on behalf of either Yale or the APA. I do want to first express my strong support for SB 401, an act concerning telehealth, but I want to use my time to explain my strong support for SB 402, an act concerning mental health parity, with the added request that the language recommended by the Connecticut Parity Coalition be added to this bill. This new proposed language would give the Connecticut Department of Insurance the Department of Insurance a critical new mental health parity enforcement tool, the ability to collect fines from health plans and issuers who are found to be non-compliant with existing parity laws. This tool was recently enacted in Massachusetts and exists in 7 other states, including California, Delaware, Illinois, New York, Oregon, Pennsylvania, and Rhode Island. Connecticut needs a parity enforcement tool today, even though the Mental Health Parity and Addiction Equity Act, MAPIA, was signed into law 16 years ago and has been mentioned. We have our own state parity law passed in 2019. And that's because parity noncompliance remains a substantial problem, which has, quote, grown more egregious with time, as recently described by the APA in a letter to the Department of Labor. They state that, quote, widespread discriminatory practices such as frequent and more arduous prior authorization practices, extremely limited provider networks, more interference with medical decision-making, and improper denials of claim persist. And what this means, this lack of parity, is that for providers, these high administrative and uncompensated burdens follow them every day. And so they either have to see fewer patients or stop being an in-network provider, or I know some of them who have burnt out and just stopped practicing altogether. And what this translates into is less access to care and additional burdens for our patients. And this chronic long-term lack of compliance with the federal parity law, and I know that Representative Meskers has mentioned that, and I want to just emphasize that this is different, and I'm trying to make a point about how if this is happening at the federal level, it is probably also happening at the state level, prompted Congress to pass the 2021 Consolidated Appropriations Act, which appropriated critical funding for the first time to 3 federal agencies with oversight to thousands of health plans. And in their very first report to Congress, they found that not one health plan they audited was in compliance with MAPIA. All were found to be in violation. Their second report found essentially the same findings with a few exceptions only. And when these plans were found to be non-compliant, the good news is they dropped their limitations and they restored benefits to literally thousands of beneficiaries. So again, if this is happening at the federal level, it's probably happening with health plans here in Connecticut that we have oversight for. So I'm asking you to please pass SB 402 with this new language so that you can give the Connecticut Department of Insurance an incredibly meaningful tool to help them ensure plans are in compliance with our state laws. And honestly, my sincere hope is that no fine is ever imposed, because that would mean our plans are in compliance. This will help our patients access the critical mental health care that they need. And I'm standing here happy to answer any questions that you may have.
Thank you so much for your testimony. I see Senator Anwar has his hand up online. Please proceed, Senator.
Thank you so much. It's good to see you, Dr. Kennedy. Thank you so much for your advocacy and the work that you do. Could you speak to how the patients are being impacted and how the healthcare workforce, especially there's a crisis in psychiatry and support for mental health in our state, how that is linked with some of these failures of insurance industry?
Absolutely. Top of mind is really our problems with network adequacy. And as I described before, there are so many added administrative burdens that come with being an in-network provider that remain uncompensated, together with a lot of the lower reimbursement rates. And when you add in, some of the insurers will have clawback provisions, they'll have kind of surprise audits. It makes a lot of providers feel that they don't even want to be in network. And added to that, a lot of times, even if you want to become in network, there are a lot of delays in terms of credentialing. And so a lot of our early career psychiatrists who graduate have difficulty being able to actually be in network. And so what that means is that insurers will often have networks where they present this kind of panel of providers for mental health and substance use services. But you need to make patients and providers need to make dozens of calls in order to finally find someone who is taking a new patient, sometimes who will even answer their requests. And in fact, there was in 2023, there was a study, survey done by the Bowman Company, Research Services, which demonstrated this lack of parity that patients had to make maybe 5 or 6 times more calls to get a mental health or substance use treater than they did for their physical conditions, either med or surge, where they might be able to get a provider within the first couple of calls, but they sometimes had to make 5, 6 or more. And I found myself, sometimes patients I see have family members or colleagues who need to find someone, and it's very, very hard. We'll go through all the names of the people who are on their panel, and none of them are accepting new patients. And so that's one example, as well as some of the prior authorization nightmares that I think have been described a little bit by some of the other speakers today.
Thank you so much. This is very helpful. And I think we are also hearing about the workforce. People are not joining the workforce because they feel between the Medicaid payments and the other processes have resulted in individuals choosing not to be in this so much needed area of providing mental health to our citizens in our state, but whether they're children or adults. Now, can I also clarify, there are laws that are already in place, and then what is being asked is that we have to pass another law for them to be able to follow the law and then create some mechanism. Can you expand on that?
Absolutely, I'd be happy to. And I do want to say actually that that to your question about less people entering, I would say actually psychiatry as a profession has become incredibly oversubscribed. In fact, last year there were not enough spots for all of the medical students who wanted to be matched in psychiatry, and match day is this Friday, so we'll see what happens. But what I do want to maybe explain and unpack a little bit are some of these laws. So we have the federal mental health, addiction, and substance use, MAPIA. I sometimes have a hard time with the whole title, which was passed in 2008. And initially, everyone thought that federal law was enough. It took a little bit of time to get all the final rules, but they were in place by around 2014. But what they did is they had the various health plans and issuers patrol themselves. All they were asked to do was sign something certifying that the way they evaluated mental health parity was sufficient. And I don't want to get too much into the weeds, but I'd love to just mention that when you look at mental health parity, there are quantitative ways where you can measure, like how many outpatient visits can you get for mental health and substance use services versus physical services like med-surg. But there are also a much more complicated category, which are called non-quantitative treatment limitations. And those are much more difficult to evaluate because, as many of you understand, how we approach mental illness and substance use diagnoses, they're not quite the same as approaching physical health. Although I will mention that the Bowman study also showed that when you treat the underlying mental health disorders, oftentimes you have lower utilization rates of physical requirement services. Anyway, finally figured out that the federal act was not doing anything. And so finally, Congress passed the 2021 Consolidation Appropriations Act, which gave a pot of money to the 3 agencies that have oversight over what Representative Meskers was describing, that they're federal agencies that have oversight over ERISA and self-funded health plans. In order to be able to just audit them and find out how are those health plans evaluating their non-quantitative treatment limitations, let's find out. And so even though they hired like 53 people who each person had authority over 7,500 health plans or so in the Department of Labor, and they could only audit, a certain number, they found that 0 of those audited health plans were in compliance with the Mental Health Parity and Addiction Equity Act. It actually took them months to be able to try to get enough information to get a determination. When they finally could, they were still non-compliant. When the Department of Labor pointed that out, what happened was that, as I mentioned in my testimony, suddenly benefits were restored to literally thousands of people who had been denied unfairly the access to treatment for autism spectrum disorder and a whole host of other ones. So basically, the second report came out last year. It showed that maybe some of the plans, maybe a handful, are indeed compliant. They have the right metrics for their non-quantitative treatment limitation comparisons. And so that's great. That's great. But still, the vast majority in the second report last year showed that mental health parity is still not being practiced by probably thousands and thousands of health plans that are under the oversight at the federal level. So why would we think that it's any different here in Connecticut? It's really difficult to get at those non-quantitative treatment limitations. But I think the insurance commissioner can do so if there's a little bit more than just carrots, like, please give this to us. If there's a little bit of a stick that if you can't give us the information, then that would constitute the fact that you don't have enough information to make a determination, which would mean that you are not in compliance with parity. Because one of the important aspects of this is that if you can't show you're in compliance by giving enough information, then you're not in compliance. So having that stick, that fine for the Department of Insurance would, I hope, help issuers and plans develop non-quantitative treatment limitation analysis that would be fair, because they would be motivated to give enough information so that they're not going to get fined. And so that's what this bill would do. And this is how it would add on to what we already have from 2019.
Thank you so much. Thank you so much. Thank you, Mr. Chair. Thank you, Dr. Kennedy.
Thank you so much, Senator Anwar. It's a delight to see you.
You're welcome. Thank you, Senator. I think Representative Meskers has a few questions for you. Representative Meskers.
Thank you very much. Thank you for your testimony. I guess the first question, when I look at our insurance industry, obviously, it's a center point of our state, and therefore I'm always guarded in how I approach the insurance industry, because I believe at some level that it's important to manifest a level of support. But I myself, I had a doctor who changed his practice. And I won't go through too many descriptors, but let's just say he was approaching my age. And at some point, because he wasn't board certified, which would have been something that would have happened 30 years ago, he was no longer covered by insurance. So those types of issues are, and in terms of access, are very important to me, and I know that's a problem. So where am I going? What's the corollary? You mentioned the fact that there are people who are graduating who are having issues in getting on the registry in psychiatry. And I guess whether that's a registry of that they're licensed or accepted by the industry into their network.
No.
I don't know that the bill. I don't know if the bill addresses that, and I'd like to hear you speak towards that particular issue, because there's a supply-demand issue as well in terms of, there's a coverage question, which I'm worried about the implications on premiums, and there's a supply-demand question, which is also raising prices and preventing people from practice. So could you speak to that at all?
Absolutely, Representative Meskers, I'd be happy to. And so there is nothing in the bill that speaks to that aspect of it, although certainly the spirit of the bill would be to have a more robust panel of providers. People who, if you look at some of the, I've been told, I haven't seen them myself, but my colleagues have told me that some of the panels have people who not only are not taking insurance anymore, but who have retired, who are out of practice. So we need to make those panels more robust. And I know I teach in the Department of Psychiatry at Yale, and I know there are people who are graduating I'm finding actually happily, increasingly wanting to stay and practice here in Connecticut. And they are fully licensed already. And I think that they are planning to get board certified. So it's not any of that credentialing. It's just that the hoops and the length of time for someone to get onto that insurer's specific panel. They have to fill out all sorts of paperwork. There's all sorts of other information, even though they've already been board certified, perhaps by the accrediting psychiatry and neurology associate. Anyway, it's really more so that they come out and they want to start their practice, let's say July 1st. They finish June 30th, they want to start their practice, but it takes 6 months for them to be able to get into a panel. And during that time, because they have incredibly high loans to pay. The average loan for a medical school student graduate, and when they come out of residency, is something like $250,000.
I was going to say 240, but go ahead.
240.
Yeah.
Okay, you got it. So, all right, I'll take it down to 240. You know, they don't have enough time to be able to sit there and wait to get credentialed. They're going to find other jobs. Maybe they'll realize they can get compensated more by having a small private practice and not taking insurance. It's easy.
I'd appreciate if I could interrupt. If I could interrupt.
I'm sorry, sir.
No. I appreciate the testimony to that. Anything you can get the committee in relation to those issues that relates to qualifying to be covered under the insurance groups. In Commerce, I reached across and I was presenting a bill on the compacts and reciprocity, and our Department of Public Health now assures me that most of the issues on compacts and reciprocity are resolved, absent, I think, nurses, where I believe the governor's office is working on one, and I believe in the Committee on Public Health are working on one on social workers. So now, if I've got everyone licensed and ready to work, and I can't get them authorized or insured or into insurance networks so that they can claim and get paid for their work, I run the risk that they're going to work out of network or privately, or that they're not going to work in my state. And that'll take me on, I'll take my insurance hat off, put my commerce hat on, and I'd rather see them work and pay their taxes in my state for their opportunity space. So anything you've got in testimony in terms of the time lags on registration or acceptance by the insurance companies, I want to let people know that the water's fine and come on in to practice.
Honestly, I am giving you anecdotal information. I've heard it's around 6 months. And again, that may not seem like a long time, but for someone who is needing to develop
$240,000 of debt, it's a long time.
Yeah.
Right? We're in agreement. So if any of those people are anecdotally, I would like those comments and feedback through the chairs or through the clerk to the insurance committee. We want to make sure, we're hearing about penalizing insurance companies, which ultimately, if it doesn't go the right way, is going to raise the premium. Or we're talking about getting more access to mental health care by getting people on the registry and licensed to practice under the policies. So I want to make sure those delays are not, if they're just anecdotal, fine. But if they are systemic, I want to know. So anything you can do to help us there, we'll be looking at that.
So absolutely, I will try to get that information, but I do want to say that streamlining the credentialing process is only one of the several steps that need to happen. That also having the fair reimbursement rates, as well as decreasing as much as possible some of the administrative burdens that are not reimbursed, would be something else to attract people to want to be on the panels. And it's, the deterioration over the last couple of decades has really, because of those primary reasons, has made insurance panels very unattractive. So I guess what I'm saying is, in addition to that, I really would hope that it's not just streamlining credentialing, but that there's also an effort on the part of the insurance industry to make psychiatrists and other mental health providers want to be on panels. Maybe they need to offer carrots, and then we don't need to offer sticks of fines. If we all offer carrots and all work in good faith, then that would be the best possible outcome.
No, I appreciate, mine might be a more singular focus, but I appreciate, I'm a member of the insurance committee. I'm chair of commerce. I have, putting on the commerce hat there. On the insurance hat, I understand you want to see that the reimbursements, the cost shifting in administrative burden, the proof, the coding, et cetera. I understand that I can see in my personal life the number of medical professionals I've dealt with who've gone to group practices or been subsumed by a hospital because they've given up on the back office issues or the cost of running an individual practice because of those hurdles. I understand it. I'm not ignorant to those issues. I appreciate
It sounds like you know the issues. I'm getting the sense that you have a very, very solid understanding, and I appreciate you sharing that with me. And I'll be sure to get back any of the anecdotal, stuff I can get.
Spoken like a good psychiatrist. You were very good with me. I feel better already. Thank you.
Thank you.
Thank you. Send him a bell. Any other questions? Thank you very much for your testimony today. It was very informative. Thank you so much.
Thank you so much for the opportunity. Take care.
Up next is Susan Halpin. Good afternoon, Susan.
Good afternoon, Senator Cabrera, Representative Pavlock D'Amato, and Representative Meskris, as well as those that are online. For the record, my name is Susan Halpin. I'm here today on behalf of the Connecticut Association of Health Plans to testify on a number of bills on your agenda. Just to start, I would say that House Bill 5463 around the certification programs is something that we do oppose on the basis of quality and assuring that doctors are up to date on the most current certification programs. Senate Bill 404 around affordability. We've had a lot of conversation about that under different bills in this committee. That is a bill that the insurance industry opposes. The rate review process is an actuarial analysis of whether rates are sufficient to pay provider claims. And we believe adding a subjective factor like affordability into that equation could have very unintended and unwarranted results, really politicizing a process that's really a mathematical exercise. We also oppose Senate Bill 405, which is an act concerning downcoding of health insurance claims. The reverse of downcoding is upcoding, and that's something that's been shown to be pretty prevalent in various studies that have been done over time. If you don't want to specifically call it upcoding, you can call it maximization of reimbursement. You can just do a quick Google search. I did one and I added that into my testimony. You will see that there are seminars and webinars that are out there for hospitals. The one I included for you was the emergency room physicians about how to maximize your insurance reimbursement. Something as simple as coding something a 5. Which is the highest level of a service when the clinical record does not support that it was a 5, it was really a 4. So there's all kinds of, different variations within coding. What we'd like to say is it's about correct coding. It's about submitting the code that the clinical record supports. And our concern about the downcoding bill as it's presented is it's going to significantly increase claims because it basically says that whatever comes in the door, you have to pay. And that is going to have a pretty significant impact on the premiums that folks pay. Just quickly, in summary, we also we support Senate Bill 401 around telehealth. The telehealth statutes have proven invaluable during the COVID crisis and beyond. It's also something that consumers want. And we see that as modernizing the current statutes around telehealth. And in terms of parity, I'm happy to address further some of the questions. And we do listen, we do hear, listen, it's not a perfect system, and mental health has been challenging. And frankly, there aren't enough providers out there. It's wonderful to hear the former speaker talk about the pipeline of providers that are coming down the pike, because that's something that's really important. Frankly, when you have such a demand for a particular service, there's no incentive, frankly, for folks to have to participate in a network. I have family members, I'm sure you do too. They say, yeah, well, we have an open appointment, but we don't take insurance. And, here's your HCFA 1500 form, and you can submit it to your insurance company and get whatever coverage that they provide. So, there is a challenge there. I think telehealth, frankly, the other bill helps that, because you do see telehealth providers wanting to participate, and you see the next generation of kids that are coming up wanting to engage in that manner. And Ally is shutting me down. So I am going to say thank you for your consideration as always, and happy to answer any questions.
Thank you very much. Representative Meskers.
Susan, it's always good to see you here. I know representing the insurance industry is always at some level a veil of tears since the bill comes from the insurance industry. Although I have to tell you, I recognize the value they provide in pooling risk and providing us with a product. And we'll start with, there's no question, you and I have had the conversation that we're compounding at 7 to 10% a year. This is not going to end well until we get control of costs. So we'll start with your commentary on down coding, up coding, around the block coding. So it would be helpful to know what the estimation of your groups or the clients you represent, if we automatically preclude down coding, which de facto includes up coding, what's the estimated cost on the premiums? Because I understand there's a wrestling match between coding and what we pay out to the providers and what we're going to get charged as a premium. So no one is going to be happy with down coding. I'm not going to be happy with up coding if it shows up in my premium. So I think we need to know what the decision is going to result in on premiums, or the estimate on not allowing the automatic. And if we don't go automatic, what is the alternative proposal that you guys would think about? Secondly, that I think I spoke before addressing the issue of reciprocity and compacts. I want to know what you guys are doing in terms of licensing or permitting of licensed medical professionals, whether they be doctors or psychiatrists in particular, since that's what we're talking about. I want to know why you're screening people who have been board certified, and is that a valuable function in your mind, and why? Be helpful. Because if I can't get people under the insurance policies to practice, then what am I doing as an insurance committee? And if you feel that you need to be the gatekeeper, I need to know why. Because I'm concerned that we're limiting the number of people who can practice in my state and who can pay me income tax in my Commerce Committee hat and can provide people coverage as my insurance committee role. I want to make sure that we have the broadest number of providers. And we all will admit that it's painful to get coverage under the insurance policy, whether it be for, sorry about that. It's impossible to get coverage under general medical practices, much less a psychiatric treatment, to get people who are licensed uncovered by the policy. So I want to know what the broad-based policy is in terms of certification at the insurance level, and how we can facilitate that. I think I want better participation. Your last comments, would you want to refer back to those for a second? Because I had another thought that escaped me.
On parity?
Yeah,
Um,
please.
Sure. I'm trying to remember what I said. But mental health parity is something that Connecticut has been a leader on. In fact, one of my first dubious roles up here was lobbying the initial mental health parity law back in I think it was the 90s. Since then, you have a significant body of legislation that is on books. I think what I'm hearing the speakers say today is that they're concerned, particularly around the NQTLs and the ability of the commissioner to enforce the provisions of the current statute. The report that has been referred to both publicly and, in this room is something that's only been in effect for a couple of years. As you hear people struggle with the definition of NQTLs, what is an NQTL? And non-quantitative treatment limitation, something around that, something along those lines. Define that, figure out how to track that, figure out what data elements support that, then measure it and say whether somebody's in compliance or not. And that's simplifying it, and it's even complicated. So the department put together a template, a report, and not surprisingly, I think to the industry, it was difficult to comply with, and it's taken some time. But in the 2023 report, and you can get all of this online at the department, they stated in that report there are notable improvements in documentation provided by the carriers. In situations where this was not the case, CID worked successfully with carriers to receive additional documentation required for further analysis. So that is just, I believe it was in November or December of 2023. So just a couple of months ago. So yes, did we struggle in the beginning? Absolutely. Have we gotten better over time? Yes. And it's my understanding that the department is actually putting together a tool in the lingo of data land that the carriers will be submitting to that will make this information much more transparent, searchable, ability to compare with other factors. So it's taken some time to implement and get the compliance.
I'll stop you there, Susan. So I appreciate. So am I to understand that the regulatory framework is being defined, the compliance is being gradually rolled out and understood? So the suggestion that you're making is that we're not ready to suffer the slings and arrows of non-compliance fees until we can all argue and agree on what constitutes good compliance. Are we not there yet, is what I'm asking.
With the caveat, I don't think we need a separate fee. We have a market conduct exam that has been utilized by the department to enforce parity compliance. Reviews have been done and penalties have been levied.
So as I understand, you'd prefer not see an additional fee.
Correct.
But the point before or not, we can argue whether we agree with you. As you represent the insurance companies, we represent the committee. The question is whether or not we can adequately measure compliance is what you're suggesting. And if the industry and the commissioner here are at the right place in terms of the metrics of compliance. So it sounds like you still that we're still a work in progress, and you think the fee levy is too soon. Whether or not that you agree with the fee levy, but if one were to be imposed, you think it's too soon to agree to one because you can't figure out compliance and non-compliance and reporting are still in flux. Is that kind of what I mean?
I guess I would parse words a little bit.
Okay.
I think what I would say is there is already an enforcement mechanism in place, and there's no need for an additional mechanism to be in place.
Then I'll leave you with, we can argue about that point. I appreciate that. But are we in agreement that compliance and reporting are still works in progress?
I think compliance and reporting are always going to be an evolution. And I think right now you are.
Do you think it's premature to make the assessment without one or two more iterations of compliance and reporting?
I think the assessment has been made, as you saw with some of those market conduct reviews, and fines were levied as a result. And the commissioner, laid down the law and said, you need to do better. And I think the result of the 2023 report is that carriers have done better. And I do think, and the department's going to do better, right? The department said, okay, maybe our tool is clumsy. It's difficult to work with. So we're going to put something new in place. But like I said, I think it's always going to be an evolution, especially when you're measuring data as new tools come out. And it gets better and laws change and you have to adapt the standards to go with the new laws or the new mandates. So it's always going to be an evolutionary process.
Thank you. Thank you for the chairman's indulgence. And just in conclusion, just, yeah, data on, I'm interested in finding out how people get past the queue once they're licensed to get covered by insurance policies, because I don't like having to hunt for a doctor for an ingrown toenail. I'd like to be, and I can't imagine what it's like for psychiatric treatment. We need to make sure that people get licensed and are approved to practice. But you heard this testimony. I don't need someone graduating with $240,000, finding out they can get covered in another state and work somewhere else. I want them working in my state if possible.
If I
Thank
could
you.
respond, Mr.
Sure,
Chairman?
yeah, go right ahead.
I appreciate exactly what you're saying, and I appreciate the frustrations that are there. I think there's always a balance, right? If you have somebody on your panel who's later proven to have been, let's just say, a stalker or some kind of history, and you didn't find that, you didn't look at that, then, it's shame on you. How are they on your panel, right? And that's an exaggerated case, obviously, but we are checking to make sure that they did in fact graduate, that they did in fact become certified, that they are who they said they are, that they have the credentials that they say they have. And that does take time.
And if we set too many liabilities and it's
Yes.
delaying the process, then on a regulatory framework, we need to know.
Okay. And then one last thing I would just add is we get gold seals of approval like everybody does, right? Ours is NCQA accreditation. And NCQA accreditation requires that you have certain standards and credentialing processes in place in order to get that gold seal. So I'll just leave you with that. I know I've been up here for a while, so.
Thank you. Thank you, Mr. Chair.
Thank you, Representative. Representative Pablo D'Amato.
Thank you. So as far as upcoding,
Mhm.
are there any audits done, or, I mean, because I think that's a concern. We're addressing something here, down coding, but at the same time, I think, I know I've seen it with practitioners who clearly put something that I don't, is just not there. And so how do you stop that? What do you do to combat that?
I think you're stating absolutely what the carriers are looking at. They're looking at patterns of practice, right? They're looking at, there are codes for single procedures, and then there are codes for combination of procedures, right? If you see a provider who's routinely submitting, 10 different single procedures as a way to upcode the bill, then the carriers have systems that recognize that and say, no, 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 the fee schedule calls for a combination reimbursement, under this situation. So, it's push-pull. There's no question about it. But the result of putting legislation like this in place, I think, is going to have, extreme unintended consequences, because exactly as you said, what's to stop somebody from continuously upcoding those systems, right?
Thank you. I appreciate that.
Thank you.
Thank you. Senator Anwar has his hand up. Senator Anwar?
Had a feeling.
How are you, Susan?
I'm good. How are you? I knew I wouldn't escape without hearing from you.
No. I appreciate your testimony and I appreciate the work that you do. I wanted to ask you, did you speak about the maintenance of certification part of the bill? You touched on something, but I did not get if you were touching on that topic or not.
Yeah, I touched on it, Senator, and honestly, we were struggling to understand the intent. I did look online to see if any testimony had been filed in support of it, and I didn't see anything filed. I'd be very interested to know, where that is headed and
Sure.
what is intended by it. But on its face value, we have concerns about it because we do think specialty certification and maintenance of certification ensures that practitioners are aware of and incorporate the latest best practices into their clinical workflows, and that it's an important component of quality care.
Sure.
So
I can clarify that so that maybe you can reflect on this. So I think what's the ground reality is that the maintenance of, first of all, the bill is not talking about certification. It's talking about maintenance of certification. And then perhaps when I'm speaking to sometimes the lawyers, they may understand this better, that if you have gone through law school and you are now able to practice because you are boarded to be able to practice. But if your current position is going to be impacted every few months, you have to take the board all over again. So it's almost like you have to leave your clients and then just do it every 3 months or 4 months to keep doing it. It's going to take you away from the work that you're doing, but at the same time, you're being charged thousands of dollars to be able to do it. So the company that has been doing it is a private company with no transparency and has made $40 to $60 million. And the people are really using it as a money grab. But there's no data to support that this is improving the quality in any shape or form. So the question is not about certification. The question is about the mock maintenance of certification process. And I think 9 out of 10 physicians, when they were asked, they actually did not want this. Even the board that was doing it, they actually apologized about how they were doing it. There are multiple states that have actually passed laws already to remove this at all different levels. It is not reducing the quality in any shape or form. It's just making sure that the restricted number of hours a clinician has to be able to manage their patients is not going to be restricted further every few months to have to spend 10, 15 hours, 20 hours to do these tests and then pay thousands of dollars to these companies. That's the perspective on this.
That's very helpful, Senator. I'm happy to take that back to our carriers and revisit the issue.
Good, and it's not impacted any states where this has been stopped. It's just stopping this money grab from the corporations. On another note, can I understand that when the state of Connecticut has passed a law on mental health parity, why is it an issue for the insurance companies not to follow that law and be hesitant about stick to watch this or ask this? It's almost it's tricky for me to understand. Help me understand that if you could.
I guess first, respectfully, I'd take issue with the fact that the carriers aren't following the law. I think they are. I think what we're talking about is how we measure their performance, right? And what is the compliance metrics that we use to measure their performance? And I'm not going to sit here and say that, you know, every carrier is perfect. When you represent an association, you can never say that. But do we have the mechanisms in place today to measure compliance? And do we have the enforcement measures necessary if somebody is out of compliance? And I think what I'm saying today is it's taken a little while to get those metrics and those mechanisms in place. I think we're here. I think the department stated in 2023, just a couple months ago, that they have seen notable improvements in the documentation that the carriers are providing. And frankly, in the past couple of years, when they didn't see that documentation and when they didn't see a confirmation of compliance, they issued and levied significant fines under market conduct reviews specifically related to mental health parity. So I guess in my estimation, you know, perhaps it's hard to answer the anecdotes, but if folks weren't complying, enforcement was undertaken and penalties were executed. So, you know, again, some stories are very difficult. I know Representative Meskers did a better job than me, I think, of talking about the self-insured versus fully insured market. So we always have to take that into consideration. But that said, I think they are complying. I think they want to comply. I think the question is how we measure compliance and are we doing it?
Thank you for that. And you basically, in your entire statement, I agree with your statement completely. But what you're saying is you are in support of the Bill 402 is in your statement, except that you say that you're not supportive of it. So because what we are saying is that we want to measure it because like you said, I take that back, that not all of them, but many perhaps, but some may be complying, but not all of them are complying. And you agree to that. So now, in order to see who is and who is not, it's worthy to have some measurement and have the Connecticut Insurance Department see that and then assess. And then that would be a way to say, insurance company X, Y, or Z, you are in compliance, good job. And perhaps insurance A, you could do better. So this is a good bill from that point of view to put some light into the reality of what may be happening, where I may be guessing and so may you.
Senator, the department does do that today. They've been doing it for the past couple of years. They issue a report. They've issued actually 3 reports to the insurance committee in 21, 2022, and 23. And it is all online if you would like to look at it. And they do assess whether or not carriers are in compliance or out of compliance. And when they have determined that carriers have been out of compliance, they have put in place penalties and fines for those carriers.
So then you're saying that the reason you don't want this bill is because it's already happening, or?
Correct. Correct.
Okay. And could you explain what kind of penalties the insurance carriers who are not complying are based on them?
I have copies of them. They're all online as well. I can get them to you, but I was just looking at one before I got up here to testify. And they paid a combined penalty of over $1 million.
Okay. So we'll have to look at the trending, and perhaps if we have somebody from the insurance industry, we can talk to them, insurance department, we can talk to them about how have the trends changed at this time, because at the ground level, we are not seeing that, but looks like if the insurance is doing their job and the insurance companies are doing their job, then why is it that the patients are not getting what they're hoping to get? So I wanted to see if we can find better understanding of that aspect too.
Certainly, we're always willing to work with you on that.
Thank you. And the third thing is upcoding and downcoding. So the bill is talking about automatic downcoding, I think. So again, fair is fair. If somebody is upcoding things, you can always assess and then see if that information is accurate, and you can downcode it, but not doing it without having the data is not fair, don't you think?
The way that I read the bill, it says that you couldn't do any adjustment of a health benefit claim to a less complex or a lower cost billing code. So it's pretty specific, and I don't think would accommodate any situation where a code was intentionally or unintentionally upcoded to maximize reimbursement.
So if there was appropriate level of coding, would your position be that it's okay to have that coding if it's an appropriate level, and without assessing, doing down coding is not fair?
The devil is always in the details, Senator. I think that legislation in this space is fraught with challenges and fraught with unintended consequences. And we would be very, very cautious about heading down that path.
Okay. I want to thank you for your testimony. I appreciate you being here. Thank you.
Thank you, Senator.
Thank you, Mr.
Appreciate
Chair.
your questions.
Thank you, Senator Anwar. You got any other questions online? Oh, I see Senator Marks has her hand up.
Yep.
Senator Marks.
Thanks, Chair. Through you. Hi, Susan.
Hi,
So
Senator.
going back to the mental health parity, then they're bad apples in every profession. If you feel, or the insurance industry feels, that they're already obeying the law, and that then why not support it? Because you don't have to worry about the increased fines, because you're already doing what the law is saying that you're doing. But we know that there are bad apples when we have many, many people that work in the mental health industry are telling us that it's not happening. We have to believe them too. So why wouldn't you support it as you think that they're already complying with the legislation?
Thank you for the question, Senator. I think, we always talk under many different scenarios about regulatory burdens and where we can reduce administrative burdens. And you've heard a lot of challenges just in here today about reporting and credentialing and pieces that insurance companies put on providers. And when we're collecting data, that's part of that mechanism as well. And I think you have to be very, very careful about layering on additional regulation, which we see, this proposal that isn't drafted yet. Again, we're answering to some of the details that we've heard in testimony and through the press. But I don't think it's necessary. I think the department has, as they should, penalized carriers when they're not behaving accordingly. And a lot of what we're talking about here is how to measure that compliance. How do you determine a carrier is compliant? I was very happy. I'm trying to remember who asked for the data, whether it was anecdotal or systemic. Because there's always going to be that one story. We are not perfect. There are going to be problems, and there may even be, a number of problems, and we need to seek to address those problems. But if it is systemic, if there is a purpose behind that, then the department has the tools it needs to take those carriers to task, to issue fines and penalties, and beyond that, frankly, under a market conduct review. And they can exercise that right today. I'm not sure that any additional fines are going to make the difference. What's going to make the difference is how we measure it, and we're getting better and better. And the 2023 report just said there have been notable improvements. And I think there's a number of folks that would say that the data is getting better. So, you're betwixt and between. It's a push and a pull. I don't think that we want to unduly burden anyone in the healthcare delivery system at this point in time.
All right, thank you.
Thank you as always.
Thank you, Senator Marks. Any other questions? So we just have one. I think it was Dr. Catherine Kennedy in her testimony. I think you were here for. She referenced a letter from API to the USDO regarding parity, that they found that not one insurer was in line with the federal parity law. How would you respond to that?
I'm not familiar
Okay.
enough with it to respond. I'm happy to get some of that feedback and report back to you.
That'd be great. And thank you for referencing the two market conduct reports. I'm going to take a look at those.
Sure. And in my testimony, you'll see the full body of bills that you all have done over the years, and it's pretty significant when you look at it.
Okay. Well, thank you for coming today.
Thank you.
Appreciate it. Up next, we have our President of our State Senate, Senator Martin Looney. Floor is yours.
Thank you very much, Mr. Chairman. It's great to be before you this afternoon. Senator Cabrera, Representative Pavlak-D'Amato, Representative Meskers. I know that Senator Anwar and Senator Marks were participating online, other members of the committee who may be participating in other forums. My name is Martin Looney. I am the state senator from the 11th district, representing parts of New Haven and Hamden, and here today to express my support for Senate Bill 404, an act concerning affordability as a factor in premium rate filings for individual and group health insurance policies, and Senate Bill 405, an act concerning downcoding of health insurance claims. That 404 would add affordability to the criteria that the Department of Insurance should consider when approving or denying any health insurance rate request. And I would ask the committee also to consider adding enhanced rate review, including a Uniform Administrative Procedure Act rate review hearings, as well as a presumption of denial of any rate request that is higher than inflation. This would be somewhat of the process used by PURA. The rate review hearings last year, I think, clearly demonstrated a need for a more rigorous UAPA process, which would allow for cross-examination. And the more rigorous process, I think, used in terms of utility rate increases would be appropriate here. And I would urge the committee to adopt that. Senate Bill 405 would prohibit health insurance companies from downcoding claims. And this can lead to insurance companies paying, of course, for a lower level of care than what was actually provided to the patients by the provider. Most concerning is that it appears that some insurers have a process for automatic downcoding of some claims and an automatic denial for others. And this clearly should not be permitted. The recent ProPublica investigation into Cigna's use of an algorithmic system to deny hundreds of thousands of claims makes this legislation necessary. It would seem that their process is by denying claims that only a certain number of those that are denied will appeal. And even if they have to pay most of the ones that appeal, they're still saving money by the denials where people just give up and go away. So patients should receive appropriate care for their condition, and providers should be paid for the care that they, in fact, actually provided. So would urge the committee to take positive action on these two bills. And thank you for all of the good work that you're doing this year and in every session.
Thank you, Senator, very much for your testimony. I think Representative Pavlik-Tomato has a question. Proceed.
Thank you. The information, where did the information come from as far as the automatic denials? Because I have heard about that for years and years. So, but you mentioned something specific.
Yes, there was a
recently.
recent article I can provide it to you from ProPublica that did an examination investigation into Cigna's use of an algorithmic system to deny thousands and thousands of claims after an average of a couple of minutes of review. And that just seems to me to be an egregious act. And we can certainly get you the ProPublica article, their investigative study.
Thank you.
Sure.
Thank you, Senator. Senator Marks has her hands up. Senator Marks, please proceed.
Thank you, Chair, through you. Hi, Senator Looney. President Looney, so good to see you. So just going back to that ProPublica article, because you and I have talked about it and I think about it often. How is Cigna allowed to do that legally? I don't understand how legally they're allowed to just deny, have it put in the newspaper, everybody read it in the newspaper, yet nothing happens to them.
Well, I'm hoping something will happen as a result of this bill.
Yeah, I agree, but I don't know. I think they need to go to jail, but okay, thank you.
Thank you, Senator.
Thank you, Senator. Thank you, Senator Looney. I just have one quick question. I believe, you and I are both at the rate review hearing last year, I think it was already. And some people argue that, this isn't like the utilities. It's not like energy. And so it shouldn't be subject. What would you say to that in terms of what we do here in terms of rate review?
Well, I think that what we saw last year was that the presenters were really not prepared to answer in any detail the questions they were asked about whether or not they negotiated with the hospitals or providers on certain rates. And they basically were unable to say anything in detail about the process in which they entered into the rates of reimbursement agreement. That seemed to me that that really defeats the whole purpose of a hearing if the entity coming before the body is unable to answer fundamental questions.
Thank you, Senator Looney. Are there any other questions? Seeing none, thank you very much for coming.
Thank you, Mr.
Thank you for
Chair, and
testifying.
thank you for this committee for all of the very significant work that you do every single year for the state of Connecticut. Thank you so much.
Thank you, sir. Up next is Jamie Rodriguez, who is online. Ms. Rodriguez?
Hello, thank you so much for having me.
Sure. You can go ahead.
Good afternoon, co-chairs Wood and Cabrera, ranking members Pavlik, D'Amato, and Wang, and the members of the Insurance and Real Estate Committee. My name is Jamie Rodriguez. I'm a licensed marriage and family therapist, as well as the advocacy chair for the Connecticut Association of Marriage and Family Therapy. I'm testifying today in support of SB 402 with multiple language additions. CTMFT represents over 2,000 MFTs employed in various clinical settings throughout Connecticut. MFTs are in-network providers with multiple commercial insurance carriers, Medicare, and Medicaid. I'm going to focus my testimony today on the impact mental health disparity has on the mental health providers, the discouraged and exhausted workforce of mental health. Connecticut continues to see an increase and escalation of diagnosis of symptoms amongst adults, adolescents, and children as young as preschool age. Mental health providers have bravely answered the call to serve those most in need in their communities. I myself have worked in multiple mental health settings and currently run a private practice in Woolkit. Over the last decade in private practice, I've seen not only an inflation of need for my services, but an inflation in barriers from insurance carriers to restrict access to care for my patients and reduce payment of my rendered services. I have countless stories I can share. However, today I will share my most explanatory story. I received a letter from an insurance carrier in response to my appropriate filed claim submission for a longtime patient. This letter was addressed to my business, in my business name, with my NPI listed on the letter, stating they were unable to process my claim due to not having my business name, my business address, nor my NPI on file. This story is not explanatory simply due to the ridiculousness of it. It's explanatory due to the brazen nature of insurance companies to break the existing laws of Connecticut without any repercussions. I was never paid for that claim or any future claims for that patient, despite my hours and hours of administrative work to resolve this confusion. My story is not a standout. The majority of mental health providers have stories exactly like mine. These purposeful policies of insurance carriers are placing providers in a moral and financial dilemma. We have seen mental health providers leaving insurance panels in droves simply to sustain overhead business costs, leaving patients desperately seeking openings for covered therapists. We're seeing prospective and current mental health providers enter alternative professions based on that this is no longer a financially sustainable profession. Connecticut already does not have a workforce large enough to meet the needs of the current mental health patients in our state, and private insurance carriers are exploiting and deterring the workforce even more. As we appreciate the committee's efforts of SB 402, it is duplicative of the existing law and respectively falls short. We encourage committee to consider the substitute language of the Connecticut Parity Coalition, also outlined in my written testimony, and to hold insurance companies accountable for fouling the laws of our state and nation. We ask that they pay fines for the willful and ongoing dereliction of Connecticut's mental health parity laws, and we seek this as a deterrence to noncompliance and a protection for all mental health patients and providers of our state. Thank you so much for your time. I'm open to any questions.
Thank you so much for your testimony today. Representative Meskers has a few questions for you.
So first, a comment, wow. Very good testimony, very much appreciated. If you could, either through the chair or would be willing, I would like you to share some of that testimony, experiential testimony if possible. I'm concerned, you know, I am in support of the industry, but I'm concerned the story you give me, and I'm concerned about whether or not we structurally are dealing with the issue in the appropriate way, whether we have the right ombudsman, whether we have the right person who is standing somewhere between yourselves and the industry to begin to collate and recognize either patterns or systemic problems and to address them. Your testimony was powerful. If it's systemic in the way you describe, it needs to be dealt with. So I would appreciate, you know, any information, and I can rest assured that that information, you know, we'll be having a conversation with the insurance commissioner, with the department and the policy issues, because that kind of letter and the Kafka type response of, you haven't provided us with information, but we've told you who you are and mailed you the letter, is kind of frightening. And it's not acceptable. So I'd like to have more information. You know, everything has to happen on the back of both feedback process, a grounding of information. I think even if we think there's systemic problems, I'm wondering, in addressing the issue, if we're capturing the problems and addressing the problems, we can penalize it. If we can't resolve the issue, we're still in the same place. So I want to make sure there's a process involved as well. So I thank you. Is there anything else you think I should know after my comments?
Yes, I think you made some really good points with that. And I would like to kind of give some of the history of what I can speak to what my association, CTMFT, has done in the past. So we absolutely have worked with the insurance commissioner. We have brought many of these concerns to them. We did a survey of our members in 2022. Some of that is outlined in my written testimony, and I can provide more information about that if you'd like as well. And we have also participated in work groups and info sessions with the insurance carriers themselves and other legislators. We have, championed and supported the appointment of a behavioral health advocate to serve as similar to the medical advocate, which has gone unappointed as of yet. So we are open to any and all ways in which to bridge this gap. I mean, as a systemic therapist, we understand that all of these systems have to work together and not against each other to benefit everyone. And we would like to see that happen. But like I, explained in that very ridiculous story, it's really hard to kind of have those conversations when you can't even agree on basic facts. Like, how did you mail me a letter if you don't have my address? like those kinds of, that's kind of what we're up against. And when it's just, especially private practice providers like myself, it's a business of one, it's me. So those are my administrative hours that I have to spend. And like other people have mentioned, I believe it was you as well, eventually just give up and lose thousands and thousands and thousands of dollars a year on work that I have done because I don't have the hours to keep fighting it.
Thank you. Like I said, I'd love us to get some of that testimony. I normally in the course of one of these conversations would say, please contact your state rep. But if this level of systemic problem you're providing me with, I'm afraid I'm going to glue my mailbox shut because but we definitely, I think we as a committee will want to go through some of because there's a process issue. I think if you are accurate, and I'm not challenging you, but if it's a systemic problem, it's not just like how much can we find somebody to run them over. It's like, how do we fix the process? I mean,
I agree.
The fine is always a regulatory punishment to get people to reform process. But I think process has to be studied at some level, and anything you can share with us, particularly those prior reports, would be very valuable. And I just instruct the clerk to take those reports and make sure all the committee people see them.
I agree, and I think if the benefit to the carriers is they may lose $1 million, but they saved $5 billion. By denying claims and kind of causing all these barriers to access to care and reimbursement, it's still kind of a win for them, isn't it, to not be compliant?
At some level, but I want good care, but understand that I want them to be judicious in the care, but I want good care. It's not as if the $5 billion goes into their pocket. They have a medical loss ratio of 15%. The other 85% is going to show up in premiums. So I have to make sure that care is adequate. I have to make sure that people are covered, and there's a judicious allocation of care, whether it be any of the medical and psychiatric care. And what I'm hearing here is concerning because it doesn't sound judicious, it doesn't sound rational, and that's why I'm asking for the testimony, because I think I'm getting it from providers, and now I want to understand if there's a process to monitor it and to correct it, and then I think the penalization comes to be when I'm convinced that I've measured it and we've got a process and people aren't following the process. And I'm not sure, that's the first question, like, where are we on that? And you don't make me feel more comfortable with your testimony. So I'm inclined to listen. So I appreciate it.
Thank you, Representative. Any other questions? I don't see any more. I just have a quick question for you. First, thank you for your testimony and thank you for what you share with us. It is very good and informative for all of us. Could you give us, you mentioned in your testimony that you have participated in, I believe it was some type of communication or conversation with the carriers. You mentioned a whole list of folks, including some other interested groups, but you mentioned the carriers, and I was curious, One, what was the response? What was the outcome of those conversations? And the second question would be, how have these denials, and you mentioned you lost thousands of dollars in claims that you just didn't have the time and energy to pursue. How have your patients been impacted by this? How's their
Thank you for those questions. Those are very good questions. As far as the work groups and the information groups that CTMFT has participated in, my predecessor actually did those, so I can't speak personally. I was not involved in it, but as an association we were. And from what I understand, what was reported by her, there was one or two that kind of were very similar to this, like what are the grievances and what's going on and what can we do better? And then nothing really changed, and then they were no longer scheduled after that, is what my understanding is of that. But I can, definitely reach out to the person who was personally involved in those work groups and get a more detailed history of what occurred for you. As far as my patients, it absolutely stresses them out. It worries them. It causes often them to reduce their frequency of care, and worries and fears about these bills falling on them. And in no judgment to anyone, I just personally am not a provider who feels like I can do that to my patients who are already under such difficult conditions and having mental health situations, that I have the financial failures fall onto them owing me for that. But there are a lot of places that do, understandably. They have to keep their business running. They have to keep the lights on. And if they do not follow up with these patients for the payments that are not covered, then they cannot be in business for anyone. But it does cause a lot of stress. And I often see people, like I said, change frequency of sessions or wait to seek care until it's needing a higher level of care, when if they had sought care sooner without these worries, they probably would have been able to manage better in an outpatient setting instead of ending up in an inpatient or partial hospitalization or something like that. So I think it's the ultimate salt in the wound. And it's this ongoing fear and worry and stress about accessing care. And it doesn't need to be like that. It's already hard enough.
Thank you. Thank you for elaborating on that. Appreciate it. It's very helpful.
Absolutely. Thank you.
Seeing no other questions, thank you so much for your testimony today. It was very informative. I appreciate it.
Thank you.
You're welcome. Up next is Mr. Benjamin Poletsky. Am I saying that right? I believe you're online. He's not here. Okay. Moving on to Mike Finley. Hey, Mike, how are you?
Doing very well. Thank you, Senator. All right, so good afternoon, Senator Cabrera, Representative Wood, Senator Huang, Representative Pavlock D'Amato, and members of the Insurance and Real Estate Committee. Thank you for the opportunity to provide testimony. My name is Mike Finley, and I am the Public Policy Coordinator for Mental Health Connecticut. And I wish to share comments on Senate Bill 402, an act concerning mental health parity. I stand before you on behalf of both MHC and the CT Parity Coalition, eager to express our gratitude for the initiative behind SB 402, while also highlighting areas where we believe enhancements are necessary for more effective mental health parity enforcement. We commend the intent behind SB 402. However, as it's been noted in prior testimony, it does duplicate the provisions of the parity legislation, Public Act 19-159, which was duly passed in 2019 and signed by the governor. There already exists a legal requirement for the Insurance and Real Estate Committee to conduct annual public hearings, specifically examining the NQTL reports. Given this standing obligation, we propose substituting language that emphasizes the enforcement of mental health parity, a recommendation outlined in the CT Parity Coalition's proposed language that you've heard quite a bit today. Why do we need this legislation? Despite the enactment of the 2008 federal bill and the 2019 state parity bill, health carriers still persist in non-compliance. Our goal is to address this persistent issue and fortify existing laws to safeguard the mental well-being of Connecticut residents. As noted in Attorney General Tong's submitted testimony, in the Insurance Department's most recent filings in 2023, it was found that multiple carriers neglected to disclose the factors influencing the design of each NQTL, with some leaving entire sections blank. Notably, an insurer omitted any analysis differentiating mental health and substance use disorder treatment from medical and surgical benefits. Our proposed language seeks to hold health carriers accountable through the implementation of fines when found in noncompliance with federal and state parity laws. Our language will provide the state with improved tools to implement and enforce our parity laws. The time to act is now. To protect the mental well-being of Connecticut residents by eliminating barriers to access to care. The implementation of our recommended language is a critical step toward achieving this objective. We extend our sincere appreciation for the support received from prominent figures such as Attorney General Tong, State Comptroller Scanlon, and numerous members of this esteemed committee. Their backing underscores the importance of the cause we champion. In closing, we respectfully request a substitution of the current language in SB 402 with the CT Parity Coalition's recommended language, ensuring a more robust and comprehensive approach to mental health parity enforcement. Thank you for your time and consideration, and we look forward to working collaboratively to advance mental health parity in the state of Connecticut because we're falling behind our neighbors. Thank you.
Mike. Thank you very much for your testimony. I see Senator Marks has her hand up virtually. Senator Marks.
Thank you, Chair, through you. When you say we're falling behind with our neighbors, first of all, thank you for testifying and thank you for all your advocacy. When you say we're falling behind with all our neighbors, can you give an example?
Yes, thank you so much for the question, Senator Marks. So specifically, the language that we are proposing through the CT Parity Coalition is taken specifically from the Mental Health ABC 2.0 Act enacted in Massachusetts in 2022. And we specifically took the section regarding enforcement, and we are utilizing the exact same fine structure that was passed and signed by the governor in Massachusetts. We're also seeing increased in fine levels in New York and Rhode Island, amongst many other states as well. And so, as was mentioned earlier in some testimony, Connecticut used to be a leader when it came to mental health parity in the country. Now we're falling behind.
Okay, and then with the fines, once they're increased, where will the fine appropriations go? Where will that money go to?
That's a fantastic question, and I want to make this very clear to the entire committee. This is not a money grab by any means. Our hope is that no money comes into the state of Connecticut by implementing these fines, because that would mean that all the health carriers are in compliance with mental health parity, existing federal and state laws. At the end of the day, that's all we want, is for insurers to comply with the existing laws. However, if the fines were to be imposed and they were to come into the state, we want them to go to a very targeted cause. I want to make it very clear that the Parity Coalition does not want any funds going towards administrative costs or to go to the general fund. We want funds to go to a targeted fund that help low-income families who need assistance with medical debt. That is just one of our ideas, but we're very open to negotiating that with the members of the committee.
Thank you. And who are the members of the committee? Who have you been working with this legislation?
Yes, of course. Thank you so much. So in addition to outside of the committee, Attorney General Tong and the State Comptroller Sean Scanlon, we have been working very closely with Senator Marks here, of course, Senator Cabrera, and many, many others. I don't want to try to list them all because I know I would leave some out, but we did have some very productive meetings. I know Representative Meskers was in on one of our meetings as well. We've had some very productive conversations, and we're really looking forward to working with all members of the Insurance and Real Estate Committee to really move this forward. Because as I said, with the support of the Attorney General, State Comptroller, and by working with the Connecticut Insurance Department, you know, we have a lot of great support behind this. We're not looking to put any health carriers out of business. We just want them to comply with the existing laws because it's the Connecticut residents who stand to lose the most.
Thank you. I have one more question, if I may, Chair.
Please proceed, Senator Marks.
Okay. So I was fortunate, and I should have looked this up before this meeting. It's I've been a little busy like everybody else. There was a deputy commissioner, a federal deputy commissioner that came and spoke to all of us in Connecticut at the community health center, all about mental health parity. And it seems like this is very important to our federal government. We just heard story after story after story from the mental health providers about how important this was and how it's not happening. So can you just explain how the state and federal legislation works together and what the federal government is advising on this right now?
Yes, thank you so much for the question. It's a great question indeed. So the Biden administration has made it very clear that they are making mental health parity enforcement a very big priority. And they're doing so through the Department of Labor and especially through the EBSA, the Employee Benefit Security Administration. And I believe that was the meeting you were referring to that we did attend along with Congressman Joe Courtney. And the EBSA Assistant Secretary made it very clear that they are dropping the hammer down on instances where health carriers are to be found in noncompliance with existing federal laws. And they wanted to engage with us at a state level because they recognize not all of this can be solved at the federal level. It does take some enforcement from the states to really make sure that health carriers are in fact in compliance. So specifically in terms of what the administration is proposing, they are proposing through the Consolidated Appropriations Act around $10 million each year for the next 5 years to trickle down to states when it comes to mental health parity enforcement, whether if that's including staffing and things of that nature. We're very excited to see those funds, but as we all know, things don't always move so quickly down at the federal level, and that funding has still yet to be approved, so no states are currently collecting it. But the fact that the Biden administration, Department of Labor, and the EBSA is making this a priority, I think that shows that Connecticut also needs to make it a priority.
Yeah, thank you. And I mean, that meeting was fascinating. And I thought it was the Deputy Commissioner of Department of Labor, but I still can't get my head around why it's Department of Labor. Well, we can talk offline about that. And that it is so important, and that we've just heard provider after provider after provider say that there still is a problem. And then to have the insurance company tell us that there isn't a problem, it is very, very frustrating. And we hear about mental health constantly in every committee. There's not a committee here that mental health legislation is not impacting, but yet this is such an important bill to really draw attention to it, and we're getting pushback. So I certainly will fight. I'm going to try not to use that word fight. I certainly will work diligently to help get good legislation passed, not just a task force, because I think we have heard how important it is that we have good legislation, and we can't be saying mental health is affecting all of our residents so much in so many ways, and yet not do something so concrete. Comes down from the federal government to say how important it is to not do it. So I thank you for just continuing to be such a strong advocate. And I am feeling confident that this committee, along with all my colleagues, that we have heard all of you loud and clear today, and that we will be able to push this past the finish line.
Thank you very much, Senator. I do appreciate that. And I did just want to make one more point if there's no other questions, but I'll wait until we see if there are any.
Sure, I
more.
think Representative Meskers has a question for you.
Under the federal and state guidelines or suggestions and the inclusion of a proposed penalty, is the penalty figure into the medical loss ratio calculation?
That I'm actually not sure, but I'm more than happy to follow up with you after the meeting.
Yeah, because I want to make sure that I'm not taxing premium holders if I'm trying to figure out a penalty.
Yep, no, that can.
Because it's kind of a self-defeating exercise there.
I would
Thank you.
definitely agree.
Thank you, Representative. I have a few questions, Mike. First, thank you for your testimony. Thank you for your advocacy and all your work on this. Some of the things that we're hearing and we're trying to grapple with this as best we can. We've heard previous testimony about fines being levied and penalties being levied by the CID here in Connecticut. But then I've also heard today from people who testified at least at the federal level about parity being violent, not one carrier being found in compliance with the federal parity law. And various groups have weighed in, whether it's Psychological Association, a Psychiatry Association. We're going to hear from several today. Help us reconcile that. What's going on here? And are penalties being levied? If so, are they insufficient? Because it seems like we're getting two different kinds of answers depending on who you ask.
Yes, of course. So as was mentioned by a prior speaker saying that, this tool is already in place, why would we duplicate this effort? The structure they currently utilize is extremely out of date and does not reflect the current gross income that these health carriers are bringing in per year. You try to find, it was through the OLR report that just came out in early February, without naming the insurer, the 2022 revenues were $324 million. If you were to hand down a $50,000 fine, that is not going to incentivize them to comply. And it's unfortunate that we have to come to this to really try to, increase these fines. But I'm sorry, it's 2024. The 2008 bill got passed. Our 2019 state bill got passed. How much longer are we going to wait until, we really hold them accountable? And unfortunately, sometimes the best practice is to levy these fines to incentivize for them to comply.
Gotcha. So what I hear you saying is the fines and penalties may be there, but they're insufficient.
Correct. And as we've been seeing in other states, as I mentioned, we are modeling this off the Massachusetts legislation, and they have seen an increase in the amount of insurers complying now. Although it's still early, I think that's remarkable that they're already seeing it just after a couple of years.
Yeah, if you haven't already, if you could send us that too. I'm curious.
Of course, more than happy to. And there's also model legislation out of Illinois as well I could send you to.
Great. Thank you very much. I don't see any other questions. Thank you very much for coming today. Thank you for your advocacy and for your testimony. It's very helpful.
Thank you so much.
Okay, thank you. We have number 17 online. You can go ahead. Hi.
Yes. Hi, hello, thank you. I am Dr. Tishiana Arma. I am the president of the Connecticut Psychiatric Society, representing 600 members strong and growing. And I am here today in support of SB 401, an act concerning the availability of telehealth providers and determining network adequacy and extending the telehealth provisions adopted during COVID-19 pandemic, as well as SB 402, an act concerning mental health parity. So, mental health parity compliance, I strongly believe would help, along with a couple of other things, to really bring about the change that is most importantly life-saving, but also cost-saving for individuals and insurers and for the state. I want to just give some details. Psychiatry resident numbers, as Dr. Catherine Kennedy talked about, have been increasing. In fact, yearly since 2011, one of just 10 specialties with increases of more than 10% over the past 5 years. And in fact, last year, we had to turn away 900 medical students who wanted to go into our field. And that's just a little under the number of people who wanted to go into the field in 2016. So we are talking about exponential increases. But we need this to really translate into more people getting psychiatric care. And a major factor that's hindering this access is inadequate compliance with mental health parity laws, which cause new and veteran psychiatrists to drop private insurance carriers or never accept them at all because of what they've experienced or seen firsthand. So there's a couple of things. First of all, in terms of the impact to patients, what you find is that because people are not getting routine, timely care for their mental health needs, their symptoms end up worsening and escalating so that they need even more intensive and higher levels of care in hospitals, which are not even permitted to keep the patients in long enough to stabilize them for safety, to return back into the community for outpatient care. And really a vicious cycle ends up beginning. And, we could talk about the higher amounts of medication that are needed and support when they are outpatient and not really at the right level of care. So I want to just give you really quick examples. One, Dr. Harding, and I can talk more about them. Dr. Harding is one of the psychiatrists who I met when she was in her residency years, and we talked. She was so eager about going out into the world and taking insurance of all types, state insurance to private. And I was excited because, of course, I take all of that. So I said, yes, you have to do it, because she helps to treat people with treatment-resistant depression. First of all, 6 months to a year later, she finally did it. She was able to get all of these insurers on board. She's treating people who are suicidal or attempted suicide. And because of extreme underpayment, several months ago, actually, in the meeting that Senator Marks was talking about, as we were hosting Lisa Gomez from EPSA, she explained that she was actually going to end up having to drop another insurer because of that underpayment. So what that translates into is that those patients were no longer going to be able to get that kind of care, at least not through their insurance, not the insurance that they were under. And then other future patients in need and we're not going to be able to get that kind of care either. Another example.
If you could just please summarize.
Absolutely. And I'll obviously have additional examples, and I'm happy to share any of them. I just want to again stress that this, along with telehealth, are key factors. We have to make sure that we are addressing health equity, and telehealth, as well as parity in mental health care, are really keys to making that happen.
Thank you. Thank you so much for your testimony today, for sharing with us your thoughts. Are there any questions online? Seeing none. Thank you very much for coming.
Thank you.
Next is Paul Kidwell. Hey, Paul, how are you?
Good to see you, Senator.
Good to see you as
Nice
well.
to be with you and those online as well. Again, for the record, my name is Paul Kidwell. I'm the Senior Vice President for Policy at the Connecticut Hospital Association, here to testify in support of SB 405, an act concerning downcoding of health insurance claims. As has been described already today, we really do appreciate the opportunity to come talk about what is a pervasive practice in the health insurance industry, to use algorithms and claims editing software to replace the judgment of health insurance companies with clinical professionals. As Senator Looney noted, it's been widely reported that insurance companies have moved aggressively to use algorithms to downcode or outright reject claims for medical services. There's no transparency provided in how the algorithms are constructed or the reasoning used to make the decisions. By design, the editing software and the algorithms are designed to disregard medical documentation that provides the patient-specific clinical circumstances and the justification in support of the recommended services and care plan. And let me just note, Senator Looney talked about a ProPublica article that has resulted in a federal lawsuit where it is alleged that Cigna denied 300,000 claims using an algorithm, and each claim was given 1.2 seconds before it was rejected. It is again, no medical judgment was going into 1.22 seconds. Many of the initial downcodes or denials are overturned through a lengthy and costly appeals process. The process often requires the time and attention of claims and billing experts and clinicians alike, as the health insurance company practices get more bureaucratic and complex. Representative Meskers noted the cost and what this means certainly for premiums, and we have the same concern. The cost of the avoidable unreimbursed expenses are ultimately borne by employers and commercially insured. They contribute directly to the widespread problem of healthcare affordability. So we appreciate the committee's action today, and happy to answer any of your questions. Thank you.
Thank you so much. You referenced the ProPublica article that Senator Looney alluded to, which I read a while ago. Is this something that is, it sounds like it's pervasive, and you mentioned the federal lawsuit that has resulted it from that article. Is this something that is more just a practice in the industry now? It's just standard, or is this something that is, oftentimes we hear in this committee, there's bad actors, but it's not systemic. How would you characterize this?
I think we need to be aware of it. It's certainly with AI becoming more and more a part of healthcare and these algorithms and frankly claims editing software. What is happening is the claims are just denied, and then you have to go through the appeals process. At such point, a clinical professional gets on the phone with a clinical professional from the health insurance company and explains why the initial code was appropriate, but the amount of cost that has now then gone into that, when most of those appeals are overturned, why go through that whole process in the first place? It's just adding additional costs to the system.
Gotcha. Well, thank you for that. Don't know if anyone else has any questions for Paul. Representative Meskers, welcome back. Any questions, or you're good? All right. Thank you so much, Paul.
Thank you very much. Good to see you.
Up next is Monica Nugent, who I think is on. Oh, she's here. Hi, Monica. Welcome.
Good afternoon, Senator Cabrera, Representative Meskers, and distinguished members of the Insurance and Real Estate Committee. My name is Monica Nugent, and I am the Public Policy and Advocacy Associate at the Connecticut Community Nonprofit Alliance, also known as simply the Alliance. The Alliance is a statewide association representing community nonprofits. Community nonprofits provide essential services to over 500,000 individuals and families in Connecticut every year, improving the quality of life in communities across the state. Many community nonprofit providers provide behavioral health services and attempt to bill insurance for those services. The Alliance supports Senate Bill 402, an act concerning parity for mental health, and asks that the committee pass it with the substitute language that the Connecticut Mental Health Parity Coalition, which the Alliance is a member of, is suggesting and is attached to my written testimony. While there was success in 2019 with the passage of House Bill 7125, now Public Act 19159, it is evident that health insurance carriers are still not compliant with both the federal and state legislation. As the recent NQTL report that's been referenced several times this afternoon states, the Connecticut Insurance Department notes, amongst other findings, that though the data may have gotten better, it is still in certain instances a failure. There was often a failure to provide to the department's satisfaction sufficient documentation demonstrating compliant parity analysis in the following areas: in overall pre-authorization and concurrent and retrospective claims denial rates between substance use disorder, mental health, and med-surg benefits. Without an enforcement mechanism to ensure that parity laws are followed, our fear is that insurance companies will continue the same practices at a detriment to the people that they serve in Connecticut. Community nonprofits provide behavioral health services, mental health, and substance use treatment to people across Connecticut. By their missions and their contracts with the state, they serve all clients and provide the care they need, regardless of their ability to pay. This means that when a commercial insurer denies a claim, the nonprofit delivers the service anyway without being paid for by that individual's insurance. After years of the state budget not adequately investing in community providers and nonprofits, they cannot afford to continue subsidizing private insurance plans that will not pay for care, and the state should enforce the penalties. Both DMIS and DCF provide limited grant funding to cover the cost of care to people who are uninsured or underinsured. If wrongful denials continue without a way to enforce the correct practice, cases of the state footing the bill to pay for the services through grants are going to continue. Passing this legislation is an important step towards gaining parity compliance and ultimately ensuring that Connecticut's consumer rights are protected and that the access to the growing demand for care continues. Thank you so much for your time on this important bill. I'm happy to answer any questions.
Thank you very much for your testimony, and Senator Lesser has some questions for you.
Yes, thank you, Mr. Chairman, and thank you, Monica, for your testimony. Just in terms of how many carriers are in compliance? Do you know how many carriers are in compliance and how many are not in compliance right now?
So I don't have that information readily available. I can definitely get back to you, but from my understanding of the report, it was like about a handful that are in compliance and the rest are not.
And this is now 4 years after we passed.
Correct.
That's all fair. Thank you. Well, we have 4 years of, I guess we have 3 years of data, but it's been 4 years.
Yes,
Yeah.
since 2019.
Thank you.
Thank you, Senator Lesser. Are there any other questions? Seeing none. Thank you very much for coming.
Thank you.
Appreciate it. Mr. Thomas Burr.
Good afternoon, Senator Cabrera, Senator Lesser, Representative Meskers, and members of the committee out there on Zoom. My name is Thomas Burr, and I am the Public Policy Manager of the Connecticut chapter of the National Alliance on Mental Illness, otherwise known as NAMI Connecticut. I am testifying today in regards to SB 402 and concerning mental health parity. As the country's largest grassroots mental health organization, we know that getting access to treatment in a timely fashion is key to recovery from a mental health condition. And timely access also leads to better, less expensive treatment paths. So we feel that mental health parity is a good way to kind of make that better for people. As an organization, we've been working on this for years. I was here when House Bill 7125 passed back in 2019, the original reporting bill. In fact, I was here the year before when SB 384 didn't make it over the finish line because there was one member of this body here at the Connecticut General Assembly that torpedoed it. It's been 5 years since we've had a mental health parity reporting bill in place. And frankly, from what I hear from our members, we are no better today than we were 5 years ago. It's really overdue. So you have my written testimony. I just want to touch on a couple of things that I heard during today's hearing that I think just maybe I can shine a little additional light on. Certainly they had the comments of the Connecticut Insurance Department in my testimony. Make sure you read those. Representative Meskers, you had mentioned the cost shifting. As someone who has facilitated a family support group for families who are caring for people with mental health conditions, it's a recurring theme. People will come in and say, you know, my loved one went in the hospital, was there a week, and then got sent home because the insurance company wouldn't pay for it anymore. But they weren't ready to come home. 15 years, and it's still the same story. And the first question I ask them is, how old is your child? Because if they're over 18, I say, get them on Medicaid. Because honestly, Husky will do a better job and you won't have nearly the fights that you'll have trying to get the paid for private healthcare insurance to provide services. That's wrong. That's a cost shift to the state taxpayer. It's just wrong. And yet it happens every day. We talked a little bit about some of the networking issues. I hear again and again, my loved one came out of the hospital. We got to get him a psychiatrist. And I started to go through the list provided by my health carrier. First person on the list is retired. Why is he still on the list? Second one, still in business, but not taking that insurance anymore. Third one, oh, they'll take him as a patient, but the first available appointment is in 6 months. And by the time they go through the list, they still don't have anything that's really going to serve the need. Again and again and again. And regarding the reporting issues, this flummoxes me because I used to be in the IT business. I've been out of it for 20 years. But you know, everyone who I worked with in that industry loved the insurance industry. And do you know why? Because no one had a bigger IT budget than the healthcare and insurance industry in general. They had fully.
Your 3 minutes are up, if you could please.
All right, so
summarize.
I'll wind up, but the reporting issue is garbage. I'm sorry, it's just garbage. So to summarize, you know, as far as anecdotal stuff in my testimony, I've got those 5 different reports. If you want a real history on how bad this has been, read the Bowman report, read the Milliman report, read RIT versus UBH, read the NAMI's Doctors Out report, and just please
pass the bill with the inclusion of the very important language provided by the Mental Health Parity Coalition, of which we are a member. It's the right thing to do, and frankly, it's long overdue. Thank you.
Thank you. Thank you for your testimony. If you can provide us with those 5 reports you referenced to the committee, that'd be helpful. Are there any questions? No, seeing none. Thank you very much.
Thank you.
All right, last but not least is Margaret Watts, who's online. Hi, Margaret.
Yes. Hi, good afternoon, distinguished chairs and members of the committee. Thank you for letting me be here today. And I know I am the last speaker. I did submit my written testimony, so I'm just going to kind of reflect on what we've heard today. I'm here as a board member of NAMI Connecticut, working closely with Tom, who you just heard, and the public policy chair. And you've heard all the facts laid out today if you've been here since the beginning. If you haven't, anyone joining late, I would recommend that you listen to, for example, Loretta J's testimony earlier today. She's a longtime NAMI member who gave really clear recent examples of how the disparities in our system affect individuals and families. And then we had Dr. Kennedy and Dr. Arma and Ms. Rodriguez showing from the provider perspective what the impact of our current parity state is on the provider community. So let's take a big step back and go, what is facing our country today? We have in our state, we have a big mental health crisis and we have a big overdose crisis. Those are 2 behavioral health conditions that are impacting all of us. So why are we 5 years after passing the Public Act in 2019? Why are we 5 years later still having this conversation? It was delightful to hear from the Association of Health Plans that the reporting has gotten better. I don't know if you all have looked at the reports. The 2023 report is 86 pages, and I find it hard to, I would have expected that the report would state very clearly a couple of metrics. X% of insurance plans are in compliance with the law. No. I think it's just clear that from the testimonies you heard today, every single person who has testified on 402 around parity, except for the Association of Health Plans, everyone is asking you to pass the bill as amended with the substitute language that all of us as part of the Connecticut Parity Coalition are encouraging. And what that language comes down to is saying, we don't have a problem with the laws. The federal laws, the state laws are all saying that, we shouldn't stigmatize people with mental illness or addiction by treating them differently from people with a med-surg issue. The problem is not the laws. The problem is the enforcement. And the enforcement has to have teeth to serve as a deterrent. We're not trying to nail insurance carriers. We're trying to deter any bad actors that are out there. The other comment I wanted to make was Rep. Meskers raised some really important questions, including about anecdotal versus systematic issues, and was wondering whether the reporting we have now is good enough to kind of assess the problem. We can't wait any longer for that, right? It's been 5 years since the most recent law. In terms of anecdotal evidence, such as the examples that Loretta J gave, I don't know if those would ever come up in the CID's reporting at the end of the year. Fortunately, Loretta is a super knowledgeable advocate and was able to identify the very problematic treatment of her clients and get them help. But that's also why the state passed into law the Office of the Behavioral Health Advocate. So I would like to ask you all, as the insurance committee members, with the responsibility for making sure that our insurance carriers are providing the coverage that their members pay for and expect. I would ask you to really look at it from that systematic perspective by implementing the substitute language for 402, and also look at what do we do for the anecdotal cases throughout the year. Can we please get that Office of Behavioral Health Care Advocate filled?
3 minutes are up if you could please summarize.
I'm all set. Thank you. Oh, no, I guess the only other thing I was going to add is Bill 401. We're all going to be back here talking about telehealth until it's permanent. So we're terrifically happy to see that 401 would extend it another 5 years. We do want it to be permanent. Thank you.
Thank you. Representative Meskers.
Thank you for so much citation here. I guess I don't know where I sit on the bill, I'll be very frank, and I understand the advocacy, I understand the concerns. Where I'm trying to wrestle with the issue is, we've spent 5 years with a regulatory framework. And so what I'm hearing is that we're not documenting, or that we haven't addressed the process, and where there's a lack of compliance. So, and I don't believe that the anecdotal is as anecdotal as we think. And I suspect there may be programmational problems. And what I want to do is concretely figure out the metrics. And I'm far from being a person with any kind of mental health framework in terms of the measurements. But what I'm hearing from the advocates is the delivery system is broken, or they're not getting delivery of service, or they're not getting adequately attended by the insurance companies. But I want to be able to document what I'm trying to achieve, how I'm trying to achieve it, and then what the penalties are. So I'll look at the legislation, I'll give it that eyeball again, but I am concerned that the process is, fundamentally there's something wrong with the process. And then I don't want people getting letters or, to their work office with their work address, with their name on it, saying, we don't know who you are. I just don't want that. And I don't want people who have been treating someone for 10 years saying, we don't know who you are or why you're still treating this person. I mean, these are the types of issues that I think, and I don't think they're anecdotal. My problem is they might be systemic. And I want to be able to make sure I've got the framework to measure the process, because the process has to be corrected. I can penalize and still not deliver on service. And if we're trying to be a role model, and we are the insurance capital still, and some people don't like that. I happen to really like being the insurance capital. So I want to lead people to the right conclusions and right decisions and right treatment and right access. I mean, that's kind of my thought. I'm not driving the bus. I'm on the insurance committee. I'm not wearing my Commerce Chair hat, but I want an effective industry, and I want people to have effective coverage. So, I don't know where I'll come out on this and what you'll think about me when we go through the vote this time, but you have a commitment that, I'm hearing loud and clear.
Thank you for that. And I would just add that, Connecticut isn't alone in this by far. I mean, Mike Finley talked about the Biden administration's commitment to this, but the Kennedy Forum, many other states have been working on this. If we're looking for metrics, if we're looking for report formats, they're out there. We don't have to reinvent.
And that may be, certainly I won't send you on that way, but any feedback to the committee on those and proposed metrics is always going to be welcome as we're trying to figure out our legislative solution. So
Thank you, Representative Meskers. Thank you, Ms. Watt. I don't see any other questions for you or comments. So thank you so much for testifying today. I appreciate it.
Thank you all for your time.
Thank you. I believe that is the last person, and that concludes this public hearing. So next time. Thank you.